Namaskar and a very good evening everyone joined with us in this industry specific webinar series with today's webinar on the most awaited topic Global Trends in Internal Audit A Look Ahead, which is organized by Internal Audit Standard Board of ICI and hosted by Thiruvananthapuram branch of SIRC of ICI. I, Suddhi Jain, moderator to this webinar, a practicing chartered accountant in Gwalior, Madhya Pradesh since 7 years, having my core practice in corporate laws and related advisory services. I extend a very warm and hearty welcome to each one of you present with us and thank you all for sparing some time from your busy schedules. Now, I would like to request C. A. Cherianji Samuel, Chairman Thiruvananthapuram branch of SIRC of ICI, to continue with their opening remarks and start the event. Over to you, sir.
Thank you, Surabhi. Respected Chairman of Internal Audit Standards Board, C.A. Charanjot Singh Nanda Sahab, Vice Chairman C.A. Gyan Chandra Mishra, respected faculties, my dear fellow chartered accountants, very good evening. We are here with another episode of webinar series on internal audit organized by Internal Audit Standards Boards of ICI, hosted by Thiruvananthapuram branch of SIRC of ICI. First of all, we thank the chairman for granting us permission for hosting this webinar. We all know that digitization of business process accelerated the transformation of internal audit function in the recent years. Especially the COVID-19 pandemic transformed the way enterprises do business and it prompted a surge in digital acceleration. It is like world is experiencing a digital revolution rather than a digital evolution. This revolution has brought about unprecedented challenges and tremendous opportunities to professionals like us. This evening, we are discussing on evolving topics. Rather, I would like to call it as a revolutionary topics like changes in internal control, social media audit, culture audit, and evaluation of tools and techniques of internal audit. All these points towards our adaptability to changed business conditions. Therefore, internal audit as a function and internal audit leaders as change agents must adapt to this accelerated transformation to continue to add value for the stakeholders. With this, I thank you all from Thiruvananthapuram branch, and special thanks to Nanda Sahab. Have a wonderful evening session. Over to you, sir.
Thank you so much, sir, for briefing today's event and such warm welcome greetings. Thank you. And now moving forward, just to inform today, due to some reasons, Nanda sir is not available with us right now. But he is the person who is an institution in himself, not only in a particular field of internal audit, but in diversified sectors and areas, very helpful, humble, and prompt by nature. Words are not enough to define his personality. The one and only C. Charanjot Singh Nanda sir, Central Council member ICI and Chairman of Internal Audit Standards Board and Digital Accounting and Assurance Board, Vice Chairman of the Banking, Financial Services and Insurance Committee. He was the member Quality Review Board set up by the Government of India. He has chaired many of the committees, including Women Members Empowerment Committee of ICI, Professional Development Committee of ICI, Committee on Financial Markets and Investor Protection, Banking, Insurance and Pension, and many more. Member of SEBI Advisory Committee on Primary Markets and Mutual Funds from 2007 to 2010. He has served ICI since several years at various designations across different domains at regional as well as at country level. Now, let's move forward for today's first technical session, Internal Controls, a Paradigm Shift. And I would like to introduce our eminent speaker, CA Piyusha Umesh Limai, designated as Manager, Financial Risk Management at Uber. Piyusha ji is a chartered accountant, company secretary, and a qualified DISA and CISA member, qualified professional with over 10 years of rich experience in risk management, SOX compliances, internal controls, and IT audits. If I talk about her work experiences, she has worked across diverse industries like healthcare, IT, insurance, cybersecurity, and aviation. Currently, she is working with Uber and leading its financial risk management team. She is a versatile and financially astute business leader with a track record of driving new levels of financial and operational efficiency for global businesses in highly regulated and complex environments. Now, I request Piyusha ma'am to share her valuable wisdom with all of us. Over to you, ma'am.
Thank you so much, Surbi, for the warm introduction. And good evening to everyone, all the eminent speakers and the faculty members. Just give me a quick second, I'll share my screen. Is it visible? Okay, perfect. So internal controls a paradigm shift. And when I was thinking of this topic, I could see my entire career flash in front of my eyes. So I have been in the internal audit, SOX, IT audit space for close to 10 years. And it's not that long a period of time for things to have changed. But since I have started working right from my internship days to till date with my stint in Uber, things have undergone a paradigm shift. And it's astonishing to see the way in which auditing has developed, the pace at it which has developed, and the tools and techniques which are being used to audit. So this is the brief agenda for today. So the first half of the presentation will be dedicated to internal controls and overview, wherein I'll be taking you through some basics because I feel they are the founding stones of everything which is to follow. So it will be significance, then some important definitions, controls life cycle, how do you actually design a control, what are the key elements when you design a control. Then we'll go on to more on the technical aspects, that is scoping, risk assessment. I'll be touching upon certain big rock items which are extremely relevant in today's world, especially in 2022 and the following years. Then the second last topic is key responsibilities, best practices, certain tips which I'm sure will come handy to you when you are doing your auditing. And last but not the least, wanted to dedicate some part to building executive presence, which is a softer aspect of the internal audit gamut, but as equally important. So moving on. So what are internal controls? So this is a typical definition of the ICFR or ICOFR, which we call as ICFR is a process consisting of policies, control procedures to assess financial statement risk and whatnot. The way I try to see at this definition is, and that is the way I interpret any kind of definition, is by dividing it into the important parts. And here, as I can see, there are three important parts to it. First talks about the policies, second talks about the control procedures, and third talks about assessing financial statement risks. So when I say policies, the question which I need to ask while designing any internal control is, do we have well-defined organizational policies to address the risks? That is the first question. And it's not only limited to having well-defined policies. The second part of it is making sure that they are implemented, they are amended at regular intervals, and whatever changes happen in the policies, they are reflected in the internal controls as well. So all these three or four things need to happen in tandem to make sure that whatever we have designed as a policy for that particular organization, for that function, is operating the way it should be. The second is control procedures. So in control procedures, the question we need to ask is, are the control procedures designed appropriately to mitigate risks? Again, uh, again, a very simple kind of statement, but not always so. So we need to ensure that whenever any control procedure is defined, whenever we are designing any controls, wherever we are mandating any kind of controls, the procedures which are applied mitigate the risk which we have identified in the first place. And that happens through a systematic process of scoping, risk assessment, and identification of controls, which we will cover in the subsequent slides. Last but not the least, for the purposes of this presentation, I'll be sticking only to the financial statement risk part of it. And we do have different kind of risks as well. But for this presentation, I'll be focusing strictly on the impact to the financials or the material misstatements. Moving on, just a summary, a glimpse of why internal controls are so important, why so much noise around them. And the reasons are numerous, but I have tried to divide it into four major categories. And the first one is achieve operational objectives. So due to the widespread globalization of the internal audit function and also of the organizations in general, it's very important that we have strong internal controls so that operations operate in a seamless way. Because it can't be the case that the HR or the onboarding process operates in a certain way in India or in Asia. It operates in a completely different way in the US region. That cannot happen because it will lead to a bit of tilt in the objectives you're trying to achieve. So first of all, strong internal controls at the right places in the right processes ensure efficiency and effectiveness of operations. The second, which is a no-brainer, is of course, it mitigates risk and improves process performance. So when you have strong internal controls in place, you know that the risk which could eventually materialize is taken care of, and ultimately it leads to an improvement in the overall process as well. The third is improves accountability among process owners. So again, as I said, in a widespread global internal audit environment, or the way globalization is happening, we need to ensure that accountability rests with the right people, like the people charged with oversight, the people who know actually what are the internal controls, how they should be implemented, and in case anything goes wrong, they bear the responsibility of fixing them. So it places clear accountability and reduces confusion. Last but not the least, and extremely important, it is indicates stronger confidence in an organization's financials. The Sarbanes-Oxley Act, I think, is a good example of that, wherein we have the 10K and the 10Q, which are the quarterly and the yearly filings. And there is a specific section dedicated to it, wherein the CEO and the CFO certify that the internal controls are operating effectively. Along with that, there is a assessment by the external auditors as well. So all these assessments are on the publicly available documents which people can read, and they do gather comfort that all the numbers, the disclosures mentioned on the face of the financials, they have a background, they are audited, and the number is true and fair. Moving on. I wanted to take a deeper dive into what actually control means. We did go through ICFR definition, but this is a more generic definition, which I think will help you to interpret the next part of what I'm going to talk about, that is key controls and non-key controls. So when we say internal controls, if I have to simplify it to the basic level, I can just say that it's a formalized process or a formalized action which ensures that my goals and objectives are achieved. Extremely simple, extremely succinct. There could be a validation of the process. It could be something which I'm already performing. The end result, of course, is to prevent or detect financial statement error and ensure reliability. So all that comes later on. But the basic definition could be construed to just say an action taken to ensure that my goals and objectives are achieved. So simple example, I would say, is the bank state balance sheet reconciliation. So the end result is to ensure that the GL reflects the right amount. So that is my end goal. And the entire, all the steps we are following in the BS reconciliation control, those are the basics or the procedures through which my end goal will be achieved. And again, one misconception I think people have while designing internal controls is that I'm already doing what I'm supposed to do. When a specific legislation comes into play, do I have to add 10 more things to it? The answer is no. If you're doing something which you're already doing, it may just be a small tweak in the procedures or better documentation which is needed, as opposed to adding a slew of, say, 10 controls in a particular process. Moving on, if I have to distinguish internal controls into a further, it could be divided into 10 other things. So key control, non-key control is the basic definition. If I have to dig a bit down, then it could be divided into, say, preventative, detective, manual, IT, all of that, those things. But for the purpose of this presentation, I'll try to keep it simple. So internal controls are divided into, first of all, key controls and non-key controls. Again, to simplify stuff, key control is something which is a must-have, and a non-key control, I would say, is a good to have. So key control, and if I apply a bit of negative element to the statement, then it would be something or a control which, if it is not there, then there is a reasonable likelihood that a material error is not detected. On the contrary, a non-key control is something which provides additional comfort to the to ensure that the risk is mitigated, and the potential if it fails is kind of immaterial. Again, we'll explain with the help of an example which I have illustrated here. So key control, say for example, is a typical provisioning control that new and modified access rights require appropriate approval prior to granting access. So this is an important control that whenever you're onboarding an employee, onboarding a person, you need to make sure that the person is onboarded with the right set of documentations, all of those checks and balances are performed. That person is given the right level of access to ensure that he can perform only the task which is supposed to do. In case if I onboard a person who is not supposed to be onboarded, or if he gets certain access rights which is not supposed to get, then he could perform any kind of errors, or he could perform an activity which could potentially lead to a fraud and eventually a materially misstated situation. So that is a key control. Now, if I compare it against a key control, again, I've taken an example which is kind of on the similar lines of the ITGC controls. So this non-key control says that management performs a substantive assessment on termination to see if any termed user has access to the system after the termination date. So this is, I would say, just a fail-safe control, because we already have a strong key control in place. One is the provisioning control, one is the deprovisioning control, which makes sure that the people are terminated at the right time from the right systems and they don't have access after the termination date. We typically also have the user access review control, which happens at periodic intervals depending upon the risk ranking of that application. So we do have all these controls. So the non-key control stated here, just a fail-safe control, a good to have control, but again, not a must-have, because we do have strong key controls in place. Another key takeaway from this slide, which I would like to illustrate, is whenever we are designing an internal control environment, the question always comes that, hey, you have designated 10 controls as key controls and 15 controls as non-key controls. Are we supposed to perform only the key controls? And the answer here is no. So if you're the business process owner, you need to perform the key controls as well as the non-key controls, albeit to a lesser extent of documentation for the non-keys. So just because internal audit is not testing the non-key controls doesn't prelude the management or the business process owners from not performing or having those controls in place, because ultimately their processes are their responsibilities and they need to ensure that whatever set of controls they have in place are being executed in the best possible manner. Moving on, this is typically how a controls life cycle works. So it could be subdivided into a lot of, I would say, sections. But again, for the purposes of simplification and generalization, I've divided design, implementation, operating effectiveness, and reporting. So what does discovery mean? And I will maybe take a very simple example that there's a new acquisition which has taken place, and you don't, it's a completely fresh slate. You don't have much knowledge about the business, about the internal controls, about the people and everything. So the first step would be to understand how the current business operates. And this is very important. I would place a lot of emphasis on this particular aspect, because till you don't know how the business operates, what is the business model, what is the revenue model, where is the revenue coming from, what are the different applications which talk with each other, what is ultimately being reflected on the face of the financials, where the data is coming from, you won't be able to risk rank the applications or to perform a proper walkthrough or a test of operating effectiveness properly. So first of all is to understand how the business operates, identify gaps in controls, identify gaps in processes. This is again extremely important. So the best way to do it, and that I'll cover in the design implementation phase, is to conduct walk, talk a lot with the business process owners, understand what are the control gaps, apply your audit acumen, rely on the subject matter expertise of the people who are actually operating the control, and therein you have it. Draft key program documents, that is narratives, the RCMs and all of that. The key deliverables which typically come out of this cycle are the scoping assessment, the narratives, the flow charts, the draft RCM, the draft risk control matrix, which is I would say the basic risk control matrix. It will undergo a lot of change as we further move along the year. The next is design implementation. Again, what I was talking about, extremely important. Conduct walkthrough meetings to understand the design attributes. Make sure that the design attributes are mapped to the risk which the control should ideally satisfy. Again, identify gaps and communicate results of the walkthroughs or the test of design. This is one part which I feel takes a lot of time, because it involves a lot of discussion with the process owners, making sure that they understand where the gaps are. Both the parties need to agree upon a remediation plan, ensure that the plan is feasible and that is working properly. The key deliverables in this would be, again, the risk control matrix, the walkthrough work paper. So this is, again, a very important document, because I think it is the only place, I won't say it's the only place, but it's the most crucial place when you get to understand how the process operates, how the controls operate, and what are the gaps. So very important, and I'll be touching upon a few best practices for conducting walkthroughs in the subsequent slides as well. The next is operating effectiveness. So once we are done with discovery, we are done with design implementation, we need to ensure that the controls which are designed effectively are also operating effectively. And this typically happens in two phases. It can be called as phase one, phase two. Phase two is towards the third quarter, and phase one is typically towards the second quarter. Some organizations call it as interim or roll forward testing, year-end testing. So it could be named in any way. In this, I think in the operating effectiveness phase, the important part is to ensure, is to plan well. Because when you're planning for the audit, you need to make sure, A, what are the controls which will be tested, the extent of testing, the period of testing, what is the period which I'm going to test, what is the mixture of the high, medium, low which is going to be tested, is the sampling methodology working for my plan, who are the people who are going to test, what are the control attributes I'll be testing for a specific control. So all these things need to be taken into consideration. Here, project management, I think, plays a very important role as opposed to execution. Again, the key deliverables here would be the audit plan, as I said, the completed controls work paper, and this could be through any tool, or through could be an Excel sheet, or could be in any form which your organization takes care of. One thing which comes out of this, and which essentially starts with the walkthrough phase, is the issues log. So that is typically known as the SAD. So the issues log needs to be logged at this point of time, because you will encounter issues from the walkthrough phase till year end. It is important, extremely important, to ensure that the issues are remediated. If not, they are reported at regular intervals to the management and also to the external auditors. So all these things should happen in tandem. Last but not the least, we have the reporting aspect side of things. And when I say reporting, again, something which needs to happen throughout the year. So the leadership must be updated, the key stakeholders must be updated to the audit committee, the steering committee, various other important meetings about the progress, what are the number of controls tested, which failed, what was the extent of failure. So was it an observation? Was it a significant deficiency? Was it a material weakness? So all of this must be communicated to the stakeholders at regular intervals. The key deliverables, I think, are pretty much same. Listed the AC deck here, but it could be any other meeting. Statement of aggregated deficiencies, which is SAD, and it should be finalized during the year-end filing. So this is how typically a controls life cycle operates. One key takeaway, or one thing which I would like to point out is, whenever you are designing a new control environment completely fresh, say again taking example of an acquisition, say it's a brand new acquisition, then the least thing which you need to do is to ensure that you have the minimum controls needed, which will kind of cover all the major risks. And they could be, so typically in my organization, we call them as bridge controls. But in some organizations, they call them as big six controls. So they could be named anyway. And typically they are on the lines of the balance sheet reconciliations, the different fluxes. So the profit and loss flux, the balance sheet flux, and the revenue flux. So they are typically on the lines of this. Another control which is there is the 302 certifications. So in the case of SOX, typically the stakeholders need to certify at regular intervals on whether the internal controls are operating effectively. It kind of places the accountability on them. So there are all these controls, which are the big six controls or the bridge controls, which you need to make sure are operating in your environment. And if not, your focus should be to implement them first and then start with the other control, because these controls overall in totality are the all encompassing control, and they do cover a majority of the risks which could potentially prevent a major control deficiency. Moving on, another thing which I have noticed in my experience to date is that controls are mostly poorly worded. So people may understand the risk properly, people may know a lot more about the process, but the way a control is typically worded is not done in the best possible way. So here I've again tried to explain in a very simple form on how do you design a control, how do you word a control. So the first essential is obviously, again, a no-brainer is it mitigates the risks identified, which we also saw in the definition, that the control procedures mitigate the risk which you have identified as a result of the risk assessment or the scoping exercise. The next part is whenever you are writing a control, it's good to ask the following questions, and the answers you get will form the basis of the control description. So the first one will be who is performing the control. When you ask who is performing the control, naturally, the next question which your mind will ask is who is the preparer, who is the reviewer. Then if there is a preparer, are there two levels of preparers? If there is a reviewer, are there 2 to 3 levels of reviewers? So just one question like who is performing the control gives you a lot of answers which kind of form the basis of the control. The second is why is the control being performed? What is the purpose of the control being performed? Again, extremely important, gives you the base upon which you can design your control. When is the control being performed? What are the specific timelines set in place? Is it like 10 days after the quarter end? It is monthly? It is within 7 days? All the timelines should be described properly. In case, so typically I think there are 50 to 60% controls which have certain thresholds mentioned in them. So you need to make sure that all these are properly defined. One brownie tip here is to avoid ambiguities, and I've seen a lot of controls which are extremely vague. So when there's a control failure, there is a lot of discussion which happens purely on the basis of the control verbiage, that hey, your control doesn't say so, that I'm exactly doing what your control asked me to. So when you're designing a control, it's extremely important to avoid any kind of ambiguities or gray areas. Keep everything in black and white. The next part of it is the financial statement assertions. So assertions are typically assertions which a company makes concerning the fundamental accuracy of the information in its financials, and they differ from the way the FSLI operates. So for transaction level, as I've noted here, those are completeness, accuracy. For assets, liabilities, equity, it needs to be completeness, existence, rights, obligations, valuations, presentation, disclosure. There is a different set of assertions which need to be performed. So whenever you are designing a control, you need to make sure that all these assertions, depending on that specific line item, are also being satisfied. So first of all, they should satisfy the risk or mitigate the risk which you have identified. Second is the questions which you have detailed, and third is the financial statement assertions. All these three things taken together will constitute an ideal control. And again, I've tried to give an example here for that. So this is a very simple control live example, which says on a monthly basis within 7 days, the revenue manager reviews the reconciliation from system A to system B prepared by the revenue analyst. The review includes 5 points, and the last point is any unreconciled variances above a certain threshold are investigated. So if you can see, I've highlighted here the questions which I noted in the previous slides. The first question is when? What is the time? Within 7 days of the month close. Who is performing it? The revenue manager is performing it. What is being reviewed? The reconciliation is being reviewed. And what or why part of it is being answered by all these questions. The last is the what if, that what if all these is not satisfied? What if there is a variance? Then what is the action which is taken, which is also satisfied by this control? So this could be just one example of the way a control is worded. Then the next part which we discussed is mitigate the risk. So here you can see that it is mitigating a lot of risks. It is mitigating 3 major risks. So just a brownie tip here is that whenever you are designing an RCM, it is good to do a periodic check and make sure that the controls which are mitigating a lot of risks are at least worded properly. I mean, that is the bare minimum we should do, because these are, again, the big rock controls, the important controls, and they need to be worded properly because they are kind of addressing the high risks in the organization. And then I've noted down the assertions here. So all these 3 things taken together constitutes a good control. So important to keep in mind while designing your RCM. Moving on, as I said, I will be taking a deeper dive into the scoping and risk assessment. Again, I've tried to address it in the simplistic form possible. So what is scoping? So scoping is essentially a 5-step process. I would say a 4-step process because step 4 and 5 kind of go hand in hand. The first step is to determine the materiality. And what is materiality? Again, a simple explanation is that it's just a threshold which is used by the management, or it is a tolerance of error. So anything, say my materiality for my organization is 10 million, then anything above 10 million will be scoped in. So anything below 10 million is something which could be tolerated by my organization. We have decided upon it. That is my risk appetite. So anything above 10 million will be scoped in. And per PCOB, the way materiality is calculated also differs from the maturity of the organization. So if your organization is in a fairly mature state, then it's a percentage of the EBITDA. If it's a extremely new organization, it is a percentage of, I would say, assets or equity, that it is capital based, certain percentage of capital. And if it is in a fairly mature stage, but it has not made any profits yet, I think that is the point where most organizations are, then it is a percentage of revenue. So that is how materiality is calculated, that is the benchmark set by the PCOB. So once you determine materiality, you have finalized that my materiality is say 10 million. The next is to apply the materiality amount to all the FSLIs and the trial balances impacted. So you take the balance sheet, you take the income statement, you apply this 10 million threshold, and whatever is above that will be in scope. So now you determine the materiality, you applied it to the different FSLIs. The third is, once you have the core account balances, the next step is to map the balances against the processes. So once the key business processes need to be identified against the material balances. Once you have done that, then step 4 and 5 happen. That is, determine the controls in the processes. And the controls will obviously start with the business process controls. So business processes will be identified initially. That will be the first thing which is identified. And then we have the ITACs or the IPEs. So we have the IT general controls, the IT application controls, and also the IPEs, that is information produced by entities. So all of that will happen after the business processes are scoped in. So that is how typically a scoping exercise works. One thing to again keep in mind is that a scoping is a very dynamic exercise. So it can't be the case that you perform scoping at the beginning of the year and you're done with it, especially if the industry in which you operate is pretty dynamic. So if it's a dynamic industry, if there are things which are changing at a rapid pace, then you need to perform this scoping maybe more frequently, depending upon, of course, the environment in which you operate, to ensure that the balances remain constant and that you have scoped in the right account, you have scoped in the right processes for your further testing. And to explain this further, I think this is a more simplistic diagram of how do we do scoping. So it's the business to system relationship. And as I explained before, we start from the financial statements, we identify the significant financial line items. The important is the business processes, which are divided into two parts. So they are divided into the manual activities and the systemic activities. Systemic activities again are divided into 3-4 parts. So if you falter in scoping, or if you don't adapt your scoping to the way business is changing, then the problem is that all of these controls are going to be affected. So if there is a change in the financial statements, and if you don't scope that in, and if it's a material change, then you will have a large account balance or a large area of risk which is unaddressed. So extremely important to be mindful of how you're doing the scoping and the intervals in which the scoping is happening. This is just an example of a scoping, a very, very simple example which I've given here. So we have the balance sheet here. We have a FSLI, a financial statement line item for cash and cash equivalents. We have the accounts receivable. There are certain amounts mentioned here. And here I've taken the materiality, say 6 million. This is a real life example. So I apply the 6 million materiality to the balances. I make sure, or I say yes, that it is in soft scope. The process area, which I discussed before, is cash management for the cash and cash equivalents. For accounts receivable, it is revenue, and the IT application is Workday. And this could be further subdivided into a lot of different things that I could list down the reports through which are touching this particular account and which are going through the Workday application. So it could be subdivided into works, and why these line items, these amounts are extremely important, because they form the basis of a lot of things in your testing world. This is again a very simple example of the profit and loss account. So we saw the balance sheet, this is of the profit and loss account. Typically, we annualize it for the purposes of the P&L. Similar exercise, salaries, wages are annualized, they are in scope, and the process through which they relate is HR payroll. If you can see here, lot of other line items are excluded. So just again a very simplistic example of how it operates. The next is the IPE or the key custom report. So again, a very burning issue in today's world. And I have been with many organizations at various levels of maturity in their internal controls environment. And unfortunately, I have yet to see a very robust system through which IPEs or key custom reports are handled. So first of all, I think there is a lot of confusion on the definition of an IP or a key custom report. So based on my knowledge, or best of my knowledge, it can be defined as I have written here. So IPE is any filed report which could be manually prepared, A, which could be system generated file, or three, it could be a combination of a manually prepared file or a system generated report, and it is used in the performance of the control. So if you have a control and if there is a certain data sheet, a certain report which is being used in the performance of that control, then it becomes a IPE, because it is the input into the control procedures and is extremely important when you are testing that particular control. So once you have determined what is IPE, the second step is to analyze and to identify the different IPEs and make sure that you have a holistic list. It's good to have an inventory of IPEs, and then you can, depending upon the complexity of the report, I think the testing could also differ. So for some reports which are pretty static, which don't change throughout the year, maybe you need to do the testing just once. For certain reports which could undergo a lot of change, the frequency of testing could be changed. So all of that depends on the way the IPs are classified. Certain normal testing procedures, again, not specific to any application, are, first of all, the logic needs to be preserved. And if there is any change in the logic, then you need to ensure that it is going through the formal change management process and it is documented or ticketed somewhere. You should have a approval matrix, and it should go through all the proper steps, like it should be tested, it should be QA'd, it should be approved, it should be brought into production. There should be inherent segregation of duties involved in all of this. So you need to make sure that all of this is happening. Obtain and review the audit trails. One question we have is that, hey, a lot of changes are happening, but they are not preserved. Again, not an ideal audit practice. So all the audit trails should be preserved, available for you to review. When you are checking in a report, I think the basic funda of it is to ensure the completeness and accuracy of that particular report. Now, and a couple of best practices around that is to be actually present when that report is being extracted by that particular IT person or a system administrator. If that is not possible, another good option is to obtain the rights to that particular application and extract the report yourself, because you need to make sure that the parameters which are inputted in that particular report are correct and they do satisfy the objective of that control. And once you are comfortable around that, then obviously I think half of the battle is won, because the data which you need to rely on needs to be accurate. Last but not the least, it's important to limit access and preserve integrity. If it's a confidential report, then who all have access to that particular report? Say, for example, it is just being saved in a Google Drive. Then is there a change log through which you can understand who accessed that Google Drive? Are very simplistic example, but people don't think about this. And I have seen instances of things going haywire because the IPs were not in the right shape. So all of these things need to be taken into consideration. Again, an emerging topic. I think organizations are still warming up to the ideas of IPEs, how to test them, how to document them. So strong advice is to, which we have started in the organization, is to constantly hold educational sessions with the different stakeholders, talk to them about what their understanding is, correct their understanding if required, and work in partnership with them to ensure that the key custom report testing or the IPE testing operates effectively. Moving on, as I said, risk assessment, again, very technical. So you have scoped in, like, say, 50 controls. and you have scoped in 100 controls, and you want to make sure that your resources, your time is spent only on the high risk controls. How do you determine that the controls or the processes be divided into high, medium, low? And that is where risk assessment comes into play. And the first and the foremost, I think the simplistic way in which risk assessment is determined, in which risk is assessed, is the quantitative factors, in which take the materiality, simplistic. The interesting part of that is the qualitative factors. And qualitative factors, I think, differ from industry to industry. Just some examples which I've given here are nature and subjectivity of the account or disclosure, loss due to errors or frauds, accounting and reporting complexities, the manual processing involved for that particular account, any changes from the prior period, fraud risk, IT and environment. And we'll go through some of them in more detail. So these are some of the examples of risk assessments. So first I have said is the susceptibility of misstatement or loss due to errors of fraud. What does this actually mean? It means that the business I'm operating in or the process which I'm auditing is inherently subject to fraud. And I'll give you an example. Uber acquired a company known as Transplace recently, and the way in which the business model of Transplace is that there is a carrier and there is a shipper. So shipper comes to Uber, tells it that, hey, I want to shift goods from point A to point B. Uber appoints a carrier. That carrier needs to ensure that the goods are taken to the proper destination. Now here there is an inherent risk that a carrier may pilferage the goods. The carrier may just run away with the goods. So here, due to the inherent risk of fraud, that particular account, that particular process will get a higher risk ranking. And that is what we say when it is the loss due to errors or fraud. The second is the accounting and reporting complexities associated with the audit, with the account. Now, say for example, in a typical insurance world, there is an account known as IBNR, which is incurred but not received, and it involves a very high level of actuarial complex calculations. So due to the sheer nature of the account, it will be classified as a high risk account. Third is, again, extremely important, the IT environment. So say, for example, there's an IT application, there are a lot of users, a lot of accesses. SOD is extremely important. A lot of key reports are being generated from that particular application, which are again used in the performance of the high risk controls. It will become a high risk. It will be touted as a high when we are trying to risk rank it. Last but not the least is changes from the prior period. So say last year, there was a major acquisition or that particular process had a material weakness, then automatically due to the very fact that there was an issue last year, it will be taken in the high risk ranking state of things. So that is how risk is typically assessed. And I think there are a lot of different models which different organizations use, but it's just a sneak peek into how risk could be assessed in different ways. Again, I think when you are trying to assess risk, it's very important to be very close to the business in which you're operating, because certain things, again, I go back to my previous statement wherein I say understand the business correctly, because till you understand the business model, you won't be able to understand where the risk lies, and automatically your risk assessment exercise will go for a toss. So extremely important, understand the risk, assess the risk, and make sure that the high risk areas are being assessed and they are being categorized in the right manner as possible. Just a simple IT risk example. So there is an application known as Workday, which is typically an HR application, but it could be used as a financial ERP as well. So the application is Workday, and I have added certain parameters here. So first of all, you can see process level risk. So what is process level risk? Process level risk here means that a lot of the key processes are operating through Workday. So we have, say, the revenue process operating through Workday, the financial reporting process is operating through Workday. So when a lot of the processes are operating through Workday, it will get a high risk ranking. Nature of the system. So it is a transaction processing system. That's why it is high. A lot of important transactions are actually processed through that system, as opposed to, say, Blackline. So Blackline is a tool which some of you might know. It is just used to process the balance sheet reconciliations. It doesn't actually process anything. So when it is just a reporting tool, then maybe it will get a lower risk ranking as compared to a tool which involves a lot of transaction processing. Key reports which we discussed, a lot of important reports are being used which are output of Workday. Almost all the users in that organization have access to Workday, and the number of privileged accesses people is also a lot. Again, a high risk ranking. What are the changes implemented? So for this particularly, you take the change management log, which is available within the change management tool, and understand what were the changes made. Some of them may not be high risk changes, some of them may be critical code changes. So depending on that, depending upon the volume, the complexity, and the risk of that particular change, it will be classified accordingly. SOD is key. SOD is a segregation of duties. So again, the question to ask here is, what if there was no SOD? If there was no SOD, there is a high risk that the material misstatement might happen, and there is a chance of fraud as well. So again, high risk. Issues noted. Say, for example, this application had like 50 issues last year, automatically high risk ranking. So based on all these different parameters, we assign overall risk ranking to that particular application. And in this case, just as an example, it is high. So say, for example, again, we have assigned that as high. What happens next? When it is high, typically, I just take an example in case of IT world or a typical IT GCs, we define the controls to be tested. So if it's a high risk control, we take the entire gamut of controls which will be testing. So it will be the provisioning controls, the deprovisioning controls, the change management, user access review controls. All of these controls will be tested, as opposed to say it's a low risk application, it is black line for example, then we might only test the user access review because it is again an overarching control as opposed to these controls. So once you assign the risk ranking, the next step is to define the controls to be tested, full scope or limited scope. Some tips here for performing the risk assessment exercises: use existing information or data which is documented, and typically you have all these things documented in a very good way. So use all of these use all of these documentations to your best possible advantage. Second is discuss with the process owners. Keep a continuous dialogue with them. Continuously understand from them what is happening in that application, and if there is anything which you should be worried about. Again, the third point is what I discussed before, is place emphasis on starting. So keep a check on the overall risk way, because it will have a trickle down effect to this assessment, say for an IT application which you are doing. So we discuss a lot on the technical aspect side of things about the scoping, risk assessment, what are internal controls. Now I would like to just take you through some big rock items. Big rock items as in the key priorities which I personally believe, which I have seen in many organizations till now, which should be placed a lot of emphasis on. First is cybersecurity. I think this goes without saying. I mean, the way we are working currently, the way the new normal has opened up a lot of opportunities for all of us. So all of us can, I mean, many organizations are still working in the hybrid mode, wherein people come to office like for a couple of days. For the rest of the week, they are working anywhere. So the work from anywhere has obviously opened a lot of opportunities, made business easier, but it has opened new entry points for hackers as well. And the problem is that these cyber hacks are difficult to contain. Because of the sheer complexity, the frequency of the targets, it's extremely difficult to contain this data, to contain these hackers. Second, and which is the most important thing, is most of our information is now in a digitized format. So there's a lot of sensitive information which rests within an organization's server. And if there is a cyber hack, then it could lead to enormous damage to the organization and its customers. And this, I think, we have observed a lot of cyber hacks which happened this year as well. So the losses which could arise are maybe so much so that we can't even quantify them. It could lead to unprecedented damage to not only reputation, but also to a lot of other things much more important than reputation as well. So extremely important and all of that. Despite all of this, I think cybersecurity is still not given that much importance as it should be. And some steps which I've written down, which I think might be beneficial for all of us to take care of. First, foremost, extremely important but very basic, is create cybersecurity awareness. And this is, again, as I said, very basic, but It is, I think, I read something recently, and I think 80 to 90% of the cyber attacks happen due to social engineering. So this is, I think, again very basic, but people are not aware. They do share their passwords with strangers, and that leads to a social engineering attack, due to which the entire system is compromised. So you need to have good cybersecurity awareness practices. It should not be restricted to just having a training session twice a year and be done with it. It should be more frequent than that. There should be education around phishing as well, that hey, these are phishing mails, don't click on this. A good example would be to send phishing mails to all the employees, and those employees who click on that, then they should be educated further. So there are like thousands of ways and means to do it. Emphasize on the digital hygiene best practices, that is creating a complex password, enforcing the frequent change of passwords. All of that needs to be done. If there is a system update, it also needs to be done at the right time, which many of us don't do. And then it leads to a lot of damage going forward. Second is again limit data access, again very basic but often overlooked. Create a role dictionary which actually defines what are the access rights a person needs. Operate on the principle of least privilege. That means that I get access to only those things which I'm supposed to, not one thing more. It will eliminate a lot of problems. Have strong access controls in place, have frequent user access reviews, ensure that people know what they're doing, what they're reviewing. Next is backup. I think backup is again extremely important, very basic, but needs to be taken into consideration. Last but not the least, make sure that you use standard cybersecurity defenses, that is antivirus, firewall, secure Wi-Fi. There should be good intrusion detection systems in place. There should be a dedicated staff who is looking after the cybersecurity state of things, and all of those things need to be taken into consideration. Next is talent management. Again, maybe an area which unfortunately till now I have not seen being managed properly. So typically in many organizations, we do use a lot of contractors and third parties for projects. Because the projects are of a temporary nature, and we don't need a full-time employee for that. But a problem here is that the policies which are applicable to the third parties or the contractors and the full-time employees differ. It's astonishing. I've seen this in one organization that they didn't have a proper count of contractors who were working on their applications. It was scattered in 4 different places, and nobody had a clue as to what actually was going on. This is something which needs to be avoided, because these people are there with you for a limited period of time. So their accesses should be monitored even more closely. The policies which are there for your full-time employees and the contractors, they should be the same. Again, coming back to our previous point, in addition to full-time employees, these contractors should also be apprised continuously, educated continuously on the different security practices in place. Last but not the least, place extreme importance on the timely termination part of it. Have a good system in place, have an automated system in place, and that is what I try to educate my project owners as well, that as much as possible, if you have the resources, if you have the capabilities, make sure that termination happens at the right time. It is more of an automated process than a manual process in the scheme of things. The third is mergers, acquisitions. Again, something which keeps on happening a lot in today's organization, especially in the global situation. And these frequent M&A activities do disrupt the internal controls environment a lot, that I've seen happening at close quarters. So what do we do in such case? How do I handle or how do I tackle M&A activity? First of all, understand the compliance requirements, decide on the scoping, assess the timing, extent, and inherent risk associated with the acquisition. Coming back to my previous point, understand the business model, identify the gaps, and make sure that they're remediated. Have a dedicated team, and the team might consist of your own organizational people, the auditors, SME who might be an expert in that, and the people of that particular organization which is acquired. So have a strong team in place and address all of these issues. It does make everyone's life much easier. Last but not the least, segregation of duties, again, a very important entity level control. And one of the main navigators of fraud, which I have seen, again, often overlooked in many organizations, just done as a tick in the box exercise, which is not done. Why do I place emphasis on segregation of duties is is because when you are performing the SOD analysis, you get to know a lot about the different systems and the IT environment. Because the SOD exercise involves identifying the conflicts, performing a detailed risk ranking. So to do all of this, you need to understand the business. You need to know how the systems talk to each other. You need to understand the access rights which the system hosts within itself. So all of this makes you inherently a much better auditor as compared to if you have not done this exercise. So again, a very, very important ELC must not be overlooked, must be performed periodically, because it does throw up a lot of errors or a lot of anomalies which otherwise would not have been detected. So strong importance on segregation of duties. This is just a slide to show the key responsibilities between management and internal audit. Just one key takeaway from this is that internal audit has a very important role, and it acts as a liaison between the management and the external auditor. So we are in a strategic position, and I think we should make the maximum use of it, partner a lot with the business, and make sure that we act as advisors and partners rather than as a mere compliance function. The reason I put forth this slide is because this question keeps on coming up often, that whenever the business process owners come to us, what do we actually tell them? So what is the distinction or the responsibilities which they have? And again, that could be divided into two parts, that is the preparer and the reviewer. So the preparer in a nutshell executes the control activity, documents it, and the reviewer needs to ensure that whatever the preparer is doing, that is done properly, make sure that it is documented. So whatever is review procedures are, they documented, and that includes the precision limits, the subject matter, the objective of the review, and sign-offs should be clear. So just a very simple slide, but could be useful when you're having the discussions with your process owners on their responsibilities. Best practices program management, again, very simple. Assign a lead, a POC, define a RACI. So RACI is nothing but a responsibility assignment matrix, where you define the important parties who are supposed to be accountable, responsible, consulted, and informed. Place strong emphasis on documentation, keep on updating that as much as possible. In a global organization, last but not the least, communicate and over-communicate on the different milestones achieved, on the deliverables. It helps a lot. Best practices for walkthroughs and test of design, as I did touch upon this, I think in the previous slides, is conduct pre-walkthroughs, ensure that the agenda is circulated, rely on the process flow charts. I'm a big fan of process flow charts. I think they are one of the best ways to read through or understand the process. So place a lot of importance of that. Maintain minutes of meeting, make sure that the right people attend the walkthroughs. Best practice on documentation, I think we touched upon this in a little bit in the previous slides. So completeness and accuracy, the data should be complete and accurate. Review comments should also be always be included. The evidence of resolution should always be there. Document minutes, meetings, or review sessions. So I think in the interest of time, I'll just quickly glance through this. Building executive presence. So this is something where I did want to spend a bit of time in. And all of this which I discussed is great. We went through the technical aspects of things, we went on the best practices, but all of that is of no use if you're not able to communicate what you are finding, or your audit observations, or any kind of observations or conclusions to the management or your key stakeholders. So some of the key pointers which I think are very important to know is that, first of all, know your audience. So many a times it happens, especially as you climb up the corporate ladder, is that you need to present the same set of data points. You need to present the same set of data points to different audiences. So curate your presentation based on the audience which you are interacting with. Another best practice is to gather a list of questions beforehand. So if you know that you have a big presentation coming up, good to talk with the stakeholders, the audience, and understand from them what they need to hear from it. Visual appeal, again, I'm a big fan of this. Use dashboards to tell your story. We have a lot of good dashboards in place, Tableau, Power BI. So use them as much as possible to narrate your story. Always be sure on the sources of truth. Keep your supporting documents ready. Like say, for example, I have an observation, and if someone comes up in the meeting and asks me, hey, from where did you get this figure? I want to see the details. You should be well prepared. Again, very basic, but I've seen people not doing it, and it leads to a very bad impression. Third is less is more. Keep things very simple. I read somewhere that a normal attention span of a person is just 8 seconds. So if you are going to complicate things a lot, people are going to lose attention. Another trick to remember is people are always interested in knowing what is in this for me. So when I'm telling this presentation, make sure that you address the summary and the synthesis part of it as well. Summary is just getting the data points and telling that to the people. Synthesis is actually connecting the dots and making them understand how it relates to them. So be very, very cognizant of this fact when you are delivering any kind of presentation or where you are communicating any audit observation to your key stakeholders, be the audit committee, the CFO, or the CEO. Listen to the questions carefully before answering any very basic, but people often falter in this. Be confident and truthful. You are not God. You're not supposed to have all the answers. So be confident, be truthful when you're answering the questions. Last but not the least, keep an open mind. Be extremely receptive to feedback. I think a good practice again is after every presentation, discuss with your peers on, hey, how did this go? Do you think that there could have been something which I could have done better? And then work on suggestions given. Because I think once you gather the opinions of different people who may be at different experience levels than you, then only you become a better person. So all in all, I think all these points taken together will make sure that your internal control environment operates in the best possible way. There are a couple of slides which I think you can go through, but in the interest of time, I will stop here. Thank you so much. You have been a lovely audience. Thank you. Appreciate it.
Thank you so much, Piyusha ma'am, for sharing your perception and experiences. Thank you so much. So, moving forward for today's second technical session, very interesting and awaited subject, social media audit and culture audit. And for this, we are having with us our eminent speaker, C. Siddeshwar Bhallaji, Senior Vice President and member of Institute of Internal Auditors Board, and is past president for IIA Delhi chapter. He is a senior partner with Baker Tilly in India. Prior to this, he was associated with KPMG, GE, EY, Deloitte, BDO, and Mazars. In more than 19 years of his professional experience, he led multiple engagements across various competencies, including enterprise risk management, internal audits, risk compliance, and controls across different industries. He is an avid speaker at multiple forums, including ICI, Institute of Company Secretaries of India, Institute of Directors, Institute of Internal Auditors, Indian Institute of Corporate Affairs, PhD Chambers of Commerce, and many more. Without taking much of time, I request Siddeshwar sir to share his views and perceptions with all of us. Over to you, sir.
Thank you so much, Surbhi, and thanks, Cherianji, for hosting this. I'm actually delighted to have this session and have an interaction with all our distinguished members who are attending this. And I'm sure this is, I believe, getting recorded. And in case we share it with a larger audience, it'll again be really exciting that way. So the theme that we have kept is the global trends on internal audit and what's the roadmap ahead. I actually thought that what could be better than talking about culture audit, a new area of audit, social media audit. Today, if you look at organizations, they are prominently there in the social media space. So I think social media audit takes prominence. You look at internal audit, you face any board meeting, any audit committee meeting, one of the questions that will come is that is all going good? Is everything safe? Now, perhaps the ask is that there is nothing which is grossly going wrong somewhere. Yeah. So we have to actually look at some red flags while we look at internal audit. I'm not saying that we have to do a forensic review because that will entail some additional checks, which perhaps will not be in the ambit of internal auditors. But yes, the red flags have to get highlighted. Now, why does a fraud actually happen? Now, one of the things or the ask which the audit committee or the board of directors have is that also look at something which is going inside the minds of the people. And that is something which one can really dig out through a culture audit. And I think that's where the importance of this review comes up. Today, there is a lot of digitization which is happening across processes in various sectors. I would say the internal audit is taking a color which is now going through enablement of bots. I think my next speaker, which is Mohit, will perhaps be touching on those evolving technologies which is there. But I think newer areas of audit, which is like strategy audit, culture audit, social media audit, risk management audit, audit of robotic processes, that's something which is being talked about. So I thought, let me share a perspective around these areas. And to start with, I'll talk about culture audit. So if you look at culture, how do you define this word, which is culture? So culture represents, it says, invisible belief systems, right? So it is not tangible. It is something which is going in the mind. It's values, norms. Like we say, the tone from the top is very important. Yeah, always we talk about this thing, that how a tone from the top management is percolating down. Is it having do they want to have good ethical values getting transmitted across in the organization? So invisible belief system, values, norms, and preferences of the individuals that form part of this organization. And the conduct. So one side is the culture, the other side is the conduct, what people actually do, what staff, what individuals do in the organization, which represents the tangible manifestation of what is going on, the culture, the thought process, through the actions, behavior, and decisions of these individuals. Let me give you an example over here, though it I think is a bit early, but still, if you look at compliances which an organization is supposed to do, right? And for some reason, if there is a non-compliance which is coming out, and perhaps if the tone is that tone somewhere is having a color, that we need to just ensure this thing, make it happen, manage it somehow. Yeah. So somewhere the messaging which the employees may also get is that if the organization is doing it, why can't I? So actually, it's building up somewhere in the culture of people, and the conduct, the action which the individual may take is also to try to create some sort of a fraud scenario, not perhaps in a compliance area, but some other area. Yeah. So that becomes very important. And I think internal auditors acting as trusted advisors can do the best thing when they start reading the room. Like it is said that it's not that you're just having a discussion, you're reading the room. When you're sitting and having some discussions, you're trying to sense out, there's a gut feel which is backed up by some evidences at the same time. It's not just that one has to be clearly based on a gut feel you react. So another definition of culture is the actual values that influence everyday behavior within the organization. And these are not the organization's stated or desired values, but the values people actually live in their workplace. Yeah. So it's to do with the people. If you look at governance in an organization, it's the people, organization, people, processes, and the platform, which is the ERPs, the tools that are used, technology which is used. But people becomes the most important thing. And I think culture is to do with the people. And that's how it is again and again emphasized that the tone from the top is very important. So that's where I would say in terms of the definition. But what are the various components of culture, subcomponents of culture? So culture can be broken down into, as you can see on the slide, risk culture. What sort of processes an organization has in place to ensure that the entity risk is within the defined tolerance levels? So we've got this entity level control, which is a risk management policy, right? The risk management framework, which we all call it as a risk-based internal audit, which is actually an enterprise risk-based internal audit. So that's a process. Will the organization take a particular decision which can create some sort of a topsy-turvy? Yeah. So risk culture becomes extremely critical over there. Cyber culture, are employees concerned with the knowledge and about security? Are there trainings and awareness programs around passwords? So why do we have organizations wherein every, say, 30 days or whatever time frame the organization perceives correct, there is a change of password? It's actually to create that culture, yeah, that we have to have that sort of a awareness that things have to, we have to protect we have to have a strong password, and it needs to be changed. The cyber culture, fraud culture, is employee theft tolerated in the organization? Do employees understand that intellectual property of the organization belongs to organization and not them? So fraud culture. Safety culture, does the organization track workplace injuries or not? Is safety ever discussed in staff meetings? There are many organizations without naming them, the first thing they do is actually they will talk about safety before starting the meeting, right? And then the meeting continues, and it is also minuted as part of that. So our employee safety policies in place. POSH, for instance, again, prevention of sexual harassment. Now, that's again to do with the safety of staff within the organization. Compliance culture. Do we track delays, non-compliances? How are regulatory reports taken? Are they taken seriously, or it is that it can be managed? That sort of a thing. Because these are the things which will ultimately culminate into some tangible action plans by employees, by staff, and it will create or color a different culture in the organization. Conduct culture. Poor employee conduct has contributed to numerous business failures that we have seen. So is breaking rules considered acceptable, or is it non-tolerant that way? So if you look at it, Peter F. Drucker, one of the management gurus, so he said, culture eats strategy for breakfast. So one may have a very good strategy for an organization, but if the people who are there and they are not breathing in the right culture, the right tone from the top, strategy cannot deliver results. I think when we look at internal audit, we look at efficiencies, effectiveness in the systems and processes. And one of the strong pillars to deliver that is the people. And culture is actually to do with the people. So it becomes extremely critical to look at this area of audit by internal auditors. And as I dwell on this subject more, we'll be talking about how do we do this culture audit, and what are the ways and means, what are the triggers that may actually show that some sort of a problem is there. But culture is very difficult area to audit. It's very complex because it doesn't have any shape, right? We know a procurement to pay process, or a hire to retire process, or a finance record to report process. We know what are the sub processes and all, but culture we don't know. It's an amorphous concept. It doesn't have any shape. So we really need to understand how do we actually look at culture in an organization. And internal auditors, they really need to be comfortable in their understanding of culture. So today, if an internal auditor wants to do a culture audit in an organization, for an organization, it is extremely critical that the acceptability level of that auditor is there within the organization, and the auditor is considered as a trusted advisor, not only by the senior management, the top leadership, but across in the organization. The acceptability is there, because there could be sometimes very difficult questions. Without rubbing the people, you need to ask that sort of a question. So we'll see in a while how we do that, but there's no one size which will fit all solution to auditing culture. Yeah, so it has to be stitched depending on the organization, depending on the interactions that people have, and there are various ways and means actually to do that thing. I just thought I'll also take some examples. Somewhere, if you look at these examples, I'm sure we all have heard about these names. We've heard about the impacts that they have had either on society or either on the environment as an organization. It's all to do with culture at the end of the day, because if you look at it, if it has resulted in any sort of fraud, I think it's to do with the intent of the individual, the connivance with internal as well as external stakeholders, select people, and it's all to do with the culture at the end of the day. The Enron Scandal, 2001, having off-the-book accounting practices, incorporating fake holdings and all. We know the Sarbanes-Oxley was one of the regulators, SEC, they came up with, which is something like a IFC, Internal Financial Controls of India, if you want to relate it that way. Then Volkswagen Emission Scandal. So there is a software that was fitted whenever the test was to be performed, that software will trigger certain actions. So actually the emitting was reduced by 40 times, 1/40th you can say, and which is like having an impact on the environment over there. So today we talk about ESG. I think and the idea to have all these things, why these things are being done, is somewhere to make the sale happen quickly, somewhere to reduce on the cost and all those things. But it's again to do with why is the organization actually doing all those type of things. So culture somewhere breeds a result of that. So I'm keeping a blend in terms of some old, slightly old examples, some newer ones also, a blend of all, because it's not that we are talking about this culture for today. It's again an age-old concept. I think when the audit started, almost like, if I can go a few hundred years back, culture was very important, because that was the time when the kings used to send their barons and they will say that, okay, go and have a look at it. Is the tax getting deposited or not rightly? Because, and they were the trusted people. Yeah. And when you cheat and you don't deposit tax, it's actually again a part of culture, because the thought process in your mind is to do something which is with the wrong intent. Yeah. Maybe with the ulterior objective to save a few hundred rupees, or few thousand, few lakh rupees over there. That's the intent. So Lehman Brothers, 2008, again, outstanding loans exceeded its available capital many times. Obviously, it was to have that sort of a fall. And ultimately, we noted in that particular entity that they were unable to pay the debts, and it resulted in the fall. The BP scandal, again, the worst accidental oil spill, 2010. So there was a huge compensation which was paid in billions of dollars. But ultimately, I think when you look at an impact on environment, it's not just the penalty that can actually please it. Once it is done, it is done. It is irreversible over there. Yeah. Now there could be multiple reasons behind it, but I think, and it could be accidental, but it has to do with somewhere the integrity level, how loyal and how good are you in terms of the work which you have in hand. The Uber example, 2017, multiple accusations of sexual harassment. We all know about POSH as a policy. There are a lot of policies companies have. Now, POSH is prevention of sexual harassment is a policy. I think it apts quite well in terms of this example, which is there, or the reality, not an example, but a reality. And the listing got delayed. The CEO had to step down. New CEO came up, cleaned up the whole image of the company. But again, if you look at Apple as a next example, there was some sort of a software upgrade which it used to trigger, and then the battery performance, the performance of the handset used to reduce, and somewhere you change or replace the battery, it used to get addressed. The company actually had to offer huge discounts to have that battery replaced. Now, it could be that in a particular product line, in a segment, you wanted to increase your sales. Now, that's basically, if you look at it from an external angle, you wanted to increase that sort of a sale which was there, and you triggered some sort of a software update, and ultimately it landed up in this sort of a scenario. Now, why did that sort of a all action happen? Yeah, it's to do with culture. It's to do with, because agreed that you wanted to increase your sales, you wanted to increase your revenue or whatever. And I'm not taking only Apple, I'm taking all the examples, but the ulterior objective, if it has to get met, what triggered was the tone from the top, the culture, which is there, which becomes extremely critical. You had the Facebook 2018 example. So we've got GDPR, entities which have, or organizations which have worked with the European part of the world. The general data privacy rules get applicable over there. So I like the IT Act, which we have in India, which is now getting stronger with more teeth. So somewhere, if the data is getting shared without a consent, or even taking a consent which should not have been taken in this particular example that way, that data is being shared with the third party for some other objectives, yeah, so that the people who are actually taking that data can use it for their benefit. Yeah, I think there is a clear-cut intent to deceive without the knowledge of the people who are there. So you've got personal sensitive information which is there, and which the organizations now are supposed to ensure that it's not getting shared. The WorldCom scandal, capitalizing rather than expensing inflated revenues. As chartered accountants, we would know that this is something which has been a very common thing. Now I think we've got so many regulations that have come up, and these type of things can be or should be rather avoided, because when you have segment reporting, different angles in which a particular report is being presented, something may go wrong over there. But yeah, at the end of the day, to stick to the example is to do with the culture over there. The Satyam Computer Services, again, where we had the inflated revenue and the largest accounting scandal that we have, It's so why I'm talking about various type of fraud scenarios is because ultimately fraud is with the intent to deceive. Human thought process somewhere comes in the trigger, which is to do with the thought process is to do with the culture in the organization. Yeah. Zoom 2020, lack of security. So we had these security holes were quickly discovered as meetings were infiltrated by spammers streaming offensive content. And later it was realized that the end-to-end encryption for video meetings was not there, which resulted in exposure of the personal information of millions of users. Yeah. So it could be the lack of knowledge, but perhaps it could also at the same time be an intentional act if we look at. Yeah. So if we just see the corporate scams and failures, yeah, the cultural causes, either it is unethical leadership, and it's not just it has to be on paper, it has to get implemented also in spirit that way, because we may have a vigil mechanism, we may have a lot of policies which are there as an organization, but how effectively are these getting translated to the employees, to the workers, and are they actually aware about all those things? In case somebody wants to raise an alarm, does the individual know that there is a mechanism in place? If the individual knows, does the individual have a fear to raise that sort of a alarm, or there is some sort of a comfort or a cover which the organization gives to people who are doing a whistleblow for any sort of a mischievous activity in case it is happening. So poor governance again is also one of the causes of corporate scams and failures. Yeah. But when you talk about culture, is it just to do with the top management? Is it just to do with the board of directors, for instance? No, it is all stakeholders, internal as well as external. Today, if there is a fraud scenario in connivance with the third party, with the external party which is there, I think it influences, the influence also comes from there. There are organizations which have code of conduct for, obviously, for employees, for senior management and all, but they have got code of conduct even for vendors. Yeah. So they bind them as well, because they want to have the right set of tone which is set, the right set of culture, no mischievous activity, no connivance that way. At least one will get aware about it once you are signing some sort of a document. And perhaps there are organizations which impart training also, not only to internal but to external stakeholders, that this is what we feel is the right way to operate. The way of working for this organization is XYZ. And that's to do with the culture. They are building a culture, disseminating the right knowledge across in the organization and building a culture. So as internal auditors, when you do a culture audit, you actually look at all these things, the policies, the governance mechanism in the organization, how robust it is. Is it just on paper, or is it getting translated? So what are the checkpoints which are there? Do you have an ombudsperson for a whistleblower? Yes, one or two. If it is one, perhaps not that good. There are best practices. If it is two, it is good. So I think experience also counts there in terms of doing all these type of audits. But yes, it is it's a joint responsibility. Board of directors, shareholders also give approval for certain actions which the organization is supposed to take. HR as a function, senior management, various committees. I would have not named all of them, but I've just named a few of them. Summarily, you can say internal and external, all stakeholders are responsible to build a good and effective culture. Now that we've seen the definition of culture, conduct, we've seen some few examples also. What are the red flags for culture audit? Yeah. So illustratively, I've given some of these red flags. A perceived disconnect between words and action. Yeah. See, the management may say something, but actually do something else. Employees constantly fear being fired. So the security of job is not there. You don't know what's going to happen the next day. It doesn't build a good culture at the end of the day. What you say and what you act as management, and it's not that the management is or the employees are being observed. The management is also being equally observed. Today, it's a far, I would say, mature sort of setup. Also, if nobody is talking about culture, nobody wants to talk about it, because perhaps by talking about it, there are certain actions which one may have to do. So you don't talk about it. Lack of financial discipline. Don't close your books. Or if you close it, it's too delayed. Yeah. Perhaps you want to rectify certain things at a later point of time. Lack of financial discipline, payouts not on time, lack of knowledge sharing among employees. Just give the information which you feel is appropriate and don't share the full knowledge. And I'm saying across in levels, at tactical, mid, and top level, the information, the knowledge that is supposed to be shared. I'm talking about that. So it's not that what should be shared with the top management is being shared with the tactical level. No, whatever at whichever level is to be shared, it's not shared across. It's actually being hidden that way. A focus on blame or covering for each other rather than fixing the problem. Yeah. Risk management and controls, they are regarded as an inconvenience. There are many organizations, largely I would say, who are not professionally run. They will say, okay, we'll manage the risk which is there, the controls which are there. It's taken as an inconvenience, as a burden, right? Lack of prompt follow through upon the commitment. See, why I'm sharing all these things is because if you look at a culture audit, it's more on discussion based, it's more on a questionnaire based, and these are the some of the points which somewhere are factored while preparing a good questionnaire or while having those type of discussions. Yeah, maybe not that direct. It is indirectly because you want to read the room, you want to read the mind, but with logics, not that you are leaving anything which is on bias. So as an auditor, one cannot leave. So it's actually very sensitive. It's very complex. It's not easy that way. I think experience really counts a lot to do a good, effective culture audit. Yeah. Failure to escalate identified issues and active concealment of problems. You don't want to surface up the problems because you don't know that. So if you have not made a compliance to a particular provision, you want to hide it out and let time pass by and it gets just wiped off, lest any sort of a regulator comes back on this, because you know that, or one is not confident that how it is going to be reacted. Yeah, because the culture is not that positive, perhaps. So those are the things which become extremely sensitive and important. Now, on the contrary, what's the characteristics of a healthy culture? Positive tone from the top, not just the tone, but also implementation of that tone. If the top management says we want to have a posh policy, good, we want to have it. Are trainings happening? Are sign-offs happening? Are people within the organization aware about what the contents in the posh policy is? Are meetings happening periodically of that of the posh committee? Is it getting minuted? Is there any sort of is there a fear in anybody's mind to raise an alarm? And how do you actually assess that sort of a thing? As internal auditors, and I think somewhere later I have also covered that, as internal auditors, one will look at, are complaints being received or not? If not, perhaps it's a concern. If yes, how is it getting addressed? So it has to be the walk the talk, not just the positive tone. Open dialogue and atmosphere of mutual trust, open door policies. You make the individual, the employees feel comfortable that even if they come and express some grievance, it's taken positively, and it is that, okay, we will address that thing in a very transparent manner. It sets an example that way. Ethics hotlines are there, question suggestion programs are organized, employee events, meetings frequent with more transparency, it is there. And employee engagements even in objective setting and strategy discussions, yeah, depending on what level. So there are some companies that have an ideation process and they make it open across all levels because they believe that it's not just that people after a particular number of years of experience will only have that knowledge. It could be, so you got startups, a classic example. Yeah? So that's the culture which organizations have also started building, that let's give an opportunity to individuals, maybe freshers, they are coming out. And I personally also believe if somebody is done education of say almost around 20 years and all, 20, 25 years, whatever, the individual is sound enough. Yeah? So experience may be one thing. And today, even in education, you have practical insights that are shared. It's not just on paper that way. So that is to do with characteristics of a healthy culture. Incentives aligned with core values. A just culture, very important. The management is distinguishing between an honest mistake, no one is blamed, a risky behavior, addressed with coaching and education, or a reckless behavior, intentionally excessive, risky, or unethical, which is punished. So one has to distinguish, and in a very transparent manner. So the honest mistake doesn't land up in a reckless behavior, conclusion of that. So incentives that encourage healthy risk taking. Yeah. So that sets up in terms of characteristics of a healthy culture. Now, I was touching a couple of things, role of internal audit while we talk about culture audit. So it helps in identifying root causes regarding culture, also areas just as operating with best practices. Governance structure, roles, responsibility related to culture and audit. I think I've talked about effectiveness of culture-related trainings, code of conducts, ethics, policy on POSH, how seriously do employees take the trainings, are the delivery methods effective and all. So I think the role of internal auditors, though it's a very amorphous subject, like we said, but somewhere one has to customize the approach, the way the audit is handled from organization to organization. It's not one stitch that will fit all. But yes, internal auditors, the best thing that they can do is to give an input on the culture of an organization. I think when the audit committee board of directors also ask the internal auditors, when you present over there, is all going right? Is there something you want to share? I think they are actually wanting to know not just what is there as part of transactions, as part of processes, as part of risk, but also as part of the people which is there. How many times the people concept is being talked about? Culture is to do with that. So role of internal audit, coming back to this, performing engagements that consider employee incentives. So if as internal auditors, you look at an audit area, employee incentive, hiring program, disciplinary actions, how that is getting addressed, protocols on escalation, how is a whistleblower getting treated? Yeah, what sort of a comfort is given to the whistleblowers also, safety wise and all, so that they can speak up and escalate the issues. KPIs, KRIs relevant to the organization culture. I have a slide on that, and I'll in a while talk about that, the KPIs and the KRIs, which is there. So analyzing information related to culture gathered for the purpose. So analyzing and trending employee survey data. Yeah, again, this will come as in a separate slide. I'll just show you in a while. But yes, the skills and competencies required. I have been emphasizing this for a while now. The internal auditor is supposed to be familiar with the way of working of the organization, not just the written rules and the hierarchical norms, and how employees at different levels communicate with each other is extremely important. Skilled at reading the body language, reading the room, like I said, the non-verbal cues which are there. The internal auditor must be able to articulate in a very humble and a sober way to ask very hard questions without making the other person feel uncomfortable. And that is only possible if the internal auditor is actually looked up to in the organization as a trusted advisor. Yeah. One may be thinking that it's very difficult, but yeah, that's the reality. I think that's why we have to be more of business partners as internal auditors and more collaborative in our approach. Then only that sort of a thing will happen. If it's more like a fault finding, I have my doubts. The auditor would be able to do a good culture audit. But yes, the internal auditor should have spent a lot of time across various levels. Then only this is possible. Most of the times, I'm not saying that the in-house internal auditor can do, but perhaps an external person would be in a better position to do that. But yes, an in-house person also, depending on the acceptability of that individual, can do that. So trained by specialists on qualitative and quantitative method, interviews, design, survey designs, co-sourcing. Gut feel plays a very important role, but it should not land up in any sort of a bias by the internal auditor. So you have to have a quantitative and qualitative method. I think qualitative will gain a bit of more prominence over there. So that's in terms of skill. Education is important, but I think the software aspect, which always we say as internal auditors, we should look at the software aspect, is again very critical and important when we talk about culture audit. Now, how do you actually, so say supposing we've got this, that we have to do a culture audit. Now, how do we plan for the culture audit? Yeah. So we've got, say, for instance, we look at standard processes. We've got procure to pay, we've got order to cash, we've got hire to retire, we've got plan to produce for a production, right? And a record to report. These normally in these 5 categories, you will find any sort of a business. If it's not a manufacturing, so plan to produce will not be there, but this will be. Now, there is an audit program, there's an audit plan, which is there based on a risk that is highlighted. Now, one way to look at is that you can integrate the culture risk factors into all of these engagements, right? So when you are doing a particular, say, procure to pay, and you're looking all the cycles, sub-processes within that, you can actually, based on, because you have to have a process understanding, you will be meeting the process owners and functional heads. One can actually imbibe those type of cultural the questions and also the interviews while you conduct that as part of it. Or it could be that, yes, we won't do it across all the functions. It could be select areas. Yeah. So when procure to pay, it could be the ordering process, for example. In a hire to retire HR function, it could be when it is a recruitment process with maybe the third parties, and it could be basically select key processes could also be picked up, not all of it, because it's a bit difficult also. It can be done as a top-down approach. It can be a bottoms-up approach, both of it. Top-down will be a preferred one. And it has to be questions also. Say, supposing a questionnaire has 15 questions. Yeah, out of those 15, it's not that all are unique. Some have to be related. So it's the technique in which the questionnaire is also prepared. A good way is, based on a questionnaire, one should have a face-to-face interaction, maybe like an interview over there. So any of these approaches can work for the internal audit, but I think it's a blend of all that needs to be seen. Cutting across, maybe as part of, without being too explicit, as part of the audit process that is getting covered, this particular culture audit can be done as part of that. Yeah, it's very difficult actually to report that also. So it may be a confidential report, which is separately shared with the audit committee chair. In terms of, so here is what I was talking about, some of the risk indicators, information requirement. Now, if as an internal auditor, you are wanting to look at a customer related, so you have customer survey results. Based on that, you may get some sort of indicators on the culture, and you may deep dive further into it. Trend of customer complaints, legal cases that are going on in the organization. Yeah. If what is the cause of that particular legal case? Is it to do with the employee? Is it to do with the vendor? Why that legal case has arisen? Is it to do with a specific individual? Is it to do with a practice in the organization? All those type of things. So one has to actually deep dive into those, not just looking at the case, but what went wrong? Why did that case reach to the level of having a legal dispute over there? Warranty claims. Now, why did it actually result? And are select customers allowed to breach their credit limits? So sometimes we come and say that there is a credit limit. So these are the X people who have been given credit limit. And normally we say, okay, we want to extend them credit. But is there something else also? Why that sort of a favoritism? One has to really, so I don't want to make any hypothesis over there, but there could be multiple reasons behind it. Employee related, ethics complaint, whistleblower situation, trends, action taken, protection to whistleblowers. Very important over there. Results of culture related training and testing programs, whether it's to do with the POSH or ethics or code of conduct. Exit interview data, a very good input inside. But when do you conduct that exit interview? Is it on the last day? Is it after the exit? The type of input which one will receive, perhaps if the organization really wants to have a very candid sort of input, the timing is also very important. The nature of question is very important. It's not just that you have done the exit interview, it's fine. So a tick in the checkbox, the exit interview has been done. What did you ask? When did you ask? Do you have some sort of a mechanism? So if an employee is getting onboarded, do you ask the employee as a feedback after, say, 1 month, 3 months? And then obviously, if the employee is leaving, do you compare that sort of a trend, how the journey has been of that employee? What sort of a feedback has been given? Employee turnover statistics, attrition. Now, there could be certain acceptable levels, but there could be certain. So why that sort of attrition? Link the interview to the statistics. Are employees open? Do they feel comfortable to express the reality or not? Yeah. Sometimes social media, for instance, becomes very important over there when you get a lot of details. So that again becomes critical. So culture might be the most challenging audit topic, like I've been just emphasizing. And internal auditors have to be pragmatic about the limitations in their own organizations, also as internal audit teams. Not that one may have that sort of a skill to do it. One may need to acquire, to get trained to do that sort of an audit. It may be possible to ever give a firm opinion on a quality of an organization culture. I think it is difficult. It's very, very difficult, not for any other reason, because I think one needs to be really careful and articulate that you don't, without any sort of an intent, give a wrong opinion about an individual or about a function or about the organization. Yeah. Uh, Experience, maturity, skill will count a lot. But yes, undoubtedly, the most valuable information internal audit can give is input on the culture audit, which is there. So before I start with the social media, I just thought I'll talk 2 minutes on the crisis fraud triangle. Why do frauds happen in an organization? We'll be talking about culture. I think it's extremely critical to also understand why do frauds happen in an organization. So Cressy is given this crisis fraud triangle. They said there's a pressure on account of professional or personal reasons, either of it. You need to achieve certain targets professionally, or you have certain family pressures or commitments, illness, debt, whatever at a personal level, for which you need money. The opportunity, governance, poor controls, inadequate SOD, segregation of duty, creating complex transactions. And we saw some of the examples a while back. Creating complex transactions just to actually route in a way so people are not, or auditor is not able to track it so easily. Yeah. And somewhere I think if the opportunity is there, the pressure is there, and a rationalization. If I am not paid well, okay, I may do it. If the organization is doing it, perhaps for some of the like compliances, managing the compliances, why can't I? There's nothing wrong. So you try and rationalize in your mind that, okay, it's fine. Now, in that culture audit, this is an extremely critical and important thing, that how do you identify that this rationalization has somewhere got triggered in the employee's mind at select places, maybe not all, and how do you actually trigger that thing that no, this is not? Because it could be that somewhere when the actions in the organization are happening in a particular way for the organization, the employees may start doing it for themselves in their personal this thing. Okay, I think I'll go ahead, but on the social media audit, there was one message, Chiranjay, you had mentioned. I don't know whether it was for me or not, but if it's fine, I'm just going ahead with the second part, a quick one on the social media audit.
Now it's fine, sir. Now it's fine.
It's fine. Okay. So we spoke about culture audit in terms of what do we mean by culture audit? How can we actually do that culture audit? What are the various nuances which are part of this? What a good culture audit or a good culture within an organization will look like? What are the criteria for that? Also now, today, if you look at organizations, majority, they are on the social media, either on the, so any type of, so they are on the www, which is World Wide Web, yeah, Twitter, Facebook, LinkedIn, various places they are there. And you never know who may write what for the organization, maybe internally or externally. So social media audit gains a lot of prominence because for what reasons? What are the key social media risks that are there? Reputational risk, negative exposure of a brand on social media, hackers and fraudsters gaining access to sensitive information, because that is again done through the www, which is World Wide Web. So hackers can actually attack the data of your company if any sort of a cyber risk or a threat is there. A business risk, company activity negatively impacting the brand. Yeah. Regulatory risk. So basically, if you look at it, why do you need a social media audit? Basically to track or keep a watch on any of these risks. Today, if for example, a company is into electronics or into tea business or whichever you want to take, and all of a sudden there is something that floats around in the social media that, okay, this product is, or some mishap has happened. How do you actually, but how do you do that? I think technology plays an extremely critical role over there. Human beings, how long, how far they can actually be on the, just searching on the Google, they can't. So there are bots which are in place, which can be put or institutionalized, which will search certain keywords. And there are companies who are doing it. And they will track that, okay, this is the name of my company, wherever it is coming. What are the say 10 or 15 or 20, 100, whatever count of words which the company feels, for instance, fraud as one of the words, or any sort of a negative word which is there. Yeah, that is also tracked over there. And if you look at it, that sort of a tracking really helps to identify on a real time basis as far as any threat the company may be having on a brand or its market reputation or positioning. But what the organizations need to ask, before that I go on the techniques of social media audit, the organizations need to ask, do we have vulnerabilities in our social media presence that can be exploited, right? What sort of a brand imaging positioning do we have? Is the board well equipped to oversee the social media risk? Yeah. Are social media platforms being tracked for negative publicity by that organization? How do we respond to criticism? How do we address that sort of a thing? Okay, you're trying to identify based on a particular way, but what if some negative thing is tracked? How do you address that sort of a thing? So are we well prepared to manage a crisis? Threat assessment. Communication strategy. Are we demonstrating our core values across social media? Do our actions on social media live up to our brand promise? Have we developed and communicated the appropriate social media policies to our employees? Do our employees aware about it? Yeah. Is the investor relations domain what constitutes apt social media usage? And opportunity assessment. Are we, as an organization, leveraging social media to connect with customers, open new markets, recruit top talent, right? Which tools are being used to monitor conversations about the brand, which is, and so on and so forth. But how do you do this? So when I said a bot may be placed and that social media, that's called social media monitoring. Social media monitoring will say, okay, this particular word has been seen on the social media for say a few hundred, few thousand times, right? And it will give you more like an MIS. Fine. Okay, that's it. But how do you then complement it with good analytics, data analytics? Okay, a particular word fraud has been used out of 1,000 times, 50 times this word has been used. Whereas which region, which geography, which particular customer or a third party vendor who is using that sort of a thing, that will be social media listening. So you have that technology enabled with analytics. So the bot enabled with that sort of analytics so that the output comes. And when you apply cognitive intelligence, the human intelligence through cognitive intelligence, the scalability, computer scalability, you actually come and so that's the most sophisticated approach, social media intelligence, where it's not just compiling of data, analyzing data, but also in a very intelligent way, it is trying to highlight in a proactive basis, and the internal auditors can use this particular thing proactively on a real-time basis. Because today, and obviously when we talk about all these social media audits and all, technology has to play a big role over there. And immediately the internal auditor is how they are trying to tap it. It could be internal auditor or even an in-house, I would say, operational team. There are some organizations that are doing it that way. So intelligently, how do you track it on a proactive basis and address that sort of a situation becomes extremely important. So internal audit will basically be on the social intelligence part to look at, is there a viral content associated with the organization that is impacting the brand reputation or not? Because it's through the cognitive intelligence, it will say it is on the brand part, it is on the product quality part. Is it how does the organization is prepared to respond on that particular crisis with the right resources becomes a question over there. So I thought I'll share this perspective, wanted to be on time also at the same time. That's on the culture audit as well as social media audit. I'm sure it would have given some sort of a flavor to all the distinguished participants who are over here. That's from my side. I'm not sure whether we are taking questions now or at a later date, later time. So yeah.
Thank you so much, sir, for contributing to our knowledge, for sharing industry-specific views that with amazing practical experience. Thank you so much. We are taking questions later on, just after the third technical session. So let's move forward for the third technical session, evaluation of tools and techniques of internal audit. For this, I would like to introduce eminent speaker CA Mohit Gupta ji, working as partner with Baker Tilly in India and have more than 16 years of post-qualification experience of leading large and complex engagements for internal audits, risk management, forensics, developing standards, operating procedures, and internal control frameworks, including SOX, IFC, and risk management. By qualification, he is a chartered accountant and a qualified IT engineer. Previously, he has worked with Mazars, Deloitte, Genpact, and KPMG. He is on the board of conveners of the Delhi branch of Institute of Internal Auditor of India. He was also the co-author of Technical Guide on Risk-Based Internal Audit Planning, published by Institute of Chartered Accountants of India. Now I request CA Mohit sir to share few of his past experiences on evaluation of tools and techniques of internal audit. Over to you, sir.
Thank you so much, Survi. Just a quick check for my presentation is visible.
Yes, sir. It's perfectly fine.
Okay. So first of all, thanks to all the participants for patiently listening a couple of very exciting and mesmerizing sessions. So this is the third session, and I would try to be mindful of the time. I would not come in between your dinner for a wonderful Saturday evening just before the Diwali Eve. I'm sure you must have your own plans. So first of all, I would like to thank to all of you for sparing time on this Saturday evening and attending this wonderful session on the global trends and internal audit organized by the Internal Audit Standard Board of ICAI and hosted by the Thiruvananthapuram branch of Southern India Regional Council. I would also like to extend my thanks to Nanda sir, the chairman of IASB, and Shri Chiranji sir, chairman of the Thiruvananthapuram branch of ICAI, for this opportunity to present my thoughts and the views on this wonderful topic and interact with this wonderful audience. Before I deep dive into the technical subjects and take you on the journey of the evolution of tools and techniques, I would want to set some context. And if you see today, the world is changing fast with the digital revolution. I think we are in the era of the fourth revolution. We are calling it the digital revolution. And we all witness that any incident, whether it's in the control of the organization or not in the control of the organization, can have big impacts on the organization because it's the world of data we are living into. It's the electronic age, and any small error or any mishappening or any unintended event could have a magnitude of the impacts and the multiplier impacts on the organization. And accordingly, the internal auditor needs to change and modify their traditional approach and align with this new age world and align its techniques so that we are more and more effective. And when I say their alignment about this new age requirement and aligning to these new rules of the game, there are two important objectives that I would refer to. The first being, how do we leverage the technology as a tools and techniques of the internal audit so that our projects, whatever we do as an internal auditor, becomes more and more efficient and more effective, provides more value to the organization. And second objective being, while the organizations are adopting these technologies, the digital revolutions, and a lot of processes are getting automated, how we are able to do justice while we are auditing these processes. Because today we look at the organizations are processing the payments, recording the receivables, collections without any human intervention. Now, if any human being is not involved, any manual trigger is not involved, all transactions are happening in the back end throughout the complete automated process. How we are going to audit such transactions and how we are going to give comfort to the organizations, I think that's also one of the very important objective and very important area where we need to focus on. And in today's session, I will try to take you on the journey of evolution of various tools and techniques that are being used for performing the internal audit so that these objectives are being met effectively, and more specifically focusing on how do we leverage this technology for making our audit activities more efficient and more effective. And accordingly, if you look at the today's agenda, let me spend some time on the changing role of the internal audit, how the expectations from the internal auditors are changing, why there are challenges in the traditional audit, and why the technology needs to support us with the internal auditor as the community. I'll take you on the journey of the evolutions of tools and techniques for the business and how we as an auditor can adopt it. What are the various commonly used tools and technologies for the audit? And then deep dive more specifically into the two most important aspects of the technology. One is the data analytics, and second is the high-end analytics using the robotics and the various other features and the various other benefits that the robotics brings along with. And then in the end, let's look at the future of the internal audit with whatever we have in the hand today. What do you think in the 5 years, 7 years down the line, the internal auditor, the chief audit, or the internal audit partner life could be visualized accordingly. Now, if on the screen you see some statistics, and I'm sure these statistics are not new in the public domain and the various forums, you would have seen this, but very importantly, we need to emphasize on two important aspects. One is the high amount of data. The large number of internet users are there. Currently, there are 4.13 billion users, and we feel that by 2025, it would cross 6 billion users. And accordingly, the number of users on the social media are also increasing exponentially. Just a while back, we heard Mr. Bhalla talking about the social importance of social media audits, and I think its relevance and importance could be further emphasized by this large number of the users on the social media. The companies have started using social media as one of the important channel of the business. You would have heard of the dealers as a channel, the shops, omni-channel, bricks and mortars as a channel, or the e-commerce. So social media itself, how the company's brand and the product promotions are happening, I think we are living in that kind of an age. And third important aspect is the Internet of Things. Today we are talking about the driverless cars. Each and every gadgets, each and every equipment we are talking about, it would have some or the other element of internet connectivity to enrich the functionality of that item or to enrich the experience of the users while they are using that product. Now, with that kind of high-level connectivity through the internet, there's a huge and humongous amount of data that is being generated. And then let's see what change that high amount of data and the internet is bringing in our life, and then how it's impacting the life of an auditor. But before I get into all that, let's see how this technology and the data around us, what kind of a change it's bringing and how it's impacting. I would want to run a quick short video for you. Enjoy this. It's a couple of minutes video to give you qualitative.
Once upon a time, business as usual was often good enough. No more. Where we are going, good enough is dead. In a world where everything is connected, where everything is equally excellent, where performance is reaching perfection, there's only one space left to innovate in: you. Right now, you are a central point in the raging tornado of change fueled by digitization, mobilization, augmentation, disintermediation, automation. Well, the list goes on. Science fiction is becoming science fact. Think about self-driving cars or computers that can learn and think. The way we work will never be the same. The skills we need will be dramatically different. Winning or losing are now happening faster than ever before. So what's your response? How will you discover new opportunities in one of the most transformational times in human history? Are you driving change, or are you being driven by it? Disruption has become the new normal. With change, it's always gradually, then suddenly, well, things really have stopped happening gradually. This change is exponential. Everything that used to be dumb and disconnected is now wired and intelligent. Cars, cities, ports, farms, even our bodies will be wired with sensors and will talk to each other. These game changers are also combinatorial. They amplify each other, creating a perfect storm of change. Quantum computing fuels big data. The Internet of Things fuels artificial intelligence and deep learning, which fuels robotics. However, anything that cannot be digitized or automated will become extremely valuable. Human-only traits such as creativity, imagination, intuition, emotion, and ethics will be even more important in the future, because machines are very good at simulating, but not at being. Yes, robots and software will do some of our work, but this will allow us to focus on things that cannot be automated. to imagine change squared, you've got to start engaging more with what might be, not just with what is. Immerse yourself in the immediate future, 5 to 7 years out from today. We need to go beyond technology and data to reach human insights and wisdom. Technology represents the how of change, but humans represent the why. The future is about holistic business model. The opportunity is to be liquid, to learn just in time, not just in case, not single improvements, but complete transformations, not individual systems, but new ecosystems. Humanity is where true and lasting value is created. We will engage, rate, and buy things because of the experiences they provide, because of their transformative power. The future doesn't just happen, the future gets happened. The new way to work is to embrace technology, but not to become it. The future isn't technology, yet the bigger future lies in transcending it. Let's live and lead from here.
So I think I've seen that video about the change and the digitalization happening around us. Now, if we look at the two important aspects and the two key messages of the video, one is the change is inevitable. That's the only constant thing. It's happening all around us. It's very important that accordingly we also change and adopt this technology to remain ahead in the race. And secondly, at the end of the day, we are human beings. Now, if we adopt this technology, and everyone in the business or the industry around us, they are adopting the technology. Why can't we think of leaving the stuff that technology can do to the technology and then focus on the human only traits and think out of the box and dedicate all our energy to look into the aspects that only human beings can do. One of the classic example is which Sid just mentioned about the culture audit. Now that is something would have some amount of data, but it requires a large amount of the human skills, your experience, your people interaction to be able to deep dive into and look at what are the problem areas and how the overall culture for the organizations could be improvised. Now, taking ahead from that, let's see what is it that we as an auditor needs to further improvise and needs to enhance. I will say change is not the right word here. If we look at the some pillars and the key characteristics and the attributes of an auditor, about the integrity, the independence, the leadership, ethics, the objectivity, and at the center of all it, the trustworthy, because we exist only because we are trustworthy, because somebody relies on our output to take certain critical decisions, and hence it's very, very vital. Now, whatever the digitalization happens, whatever the complexity happens around it, all these traits are going to remain there and keep the auditor important and our role very, very critical and effective. But what's very important is the technical competencies, because the whole subject matter that we audit, whatever the work we do, whatever verifications, whatever audit technologies we adopt, I think that's going to change. And hence it's very important that we need to continuously enhance and consider the change in the business environment around us, and in correspondence to that, enhance our technical competency. Now let's focus on what all this change is happening. What's the expectations from the new age internal auditor? And you see that I have classified this into three. One is the operations side, what's changing into the business operations. Accordingly, what's driving the change in the objectives of the organizations, and hence, does that mean that our focus areas are changing? The underlying risk or the major key risks for the organizations are also changing? Or do we keep on focusing on that P2P cycle, the O2C cycle? I'm not saying those are not relevant, those are important, but are there different subjects which are the talk of the town and which are more relevant to focus on for the businesses? So let's see. If we look at the operations sides, first and important aspect, technology has been the key adopter. It has become the way of the business. So accordingly, we can't see, earlier we were talking about the cash verifications, kind of audit checks, today the risk has moved from the physical cash handling to the payment gateway controls, the quicker bank reconciliations, because everything is digitalized. The complexity and the quantum of data that has increased enormously. So do we feel that the sampling methodologies are relevant? Are they going to give us the enough comfort while we are releasing our reports? Higher proportion of the white collar and the smart workforce, and hence we are dealing with more smarter people. So the nature of the fraud or the manipulations or the misrepresentations are going to be much, much more smarter. The remote working has become a new normal, and accordingly, one is what are the different kind of risks that gets evolved while the businesses are working remotely, and secondly, do we as an auditor also can adopt remote working as an effective working methodology? Because at the end of the day, we are somewhere one of the block into the overall cost of controls for the organizations, and could this help us be more effective and still keeping the overall cost of audit within the tolerance, and increasing and changing compliance requirement? Because what's happening all this around, that the government is also becoming very active, new and new surprises forces them to bring new and new regulations, and hence how do we adopt to be able to audit those compliances and help the organizations be compliant to those regulations? I think that's the need of the hour. Now, if you look at, because of this, the objectives of the organizations are also changing. I'm not saying that the earning the profits or focusing on the bottom line is no more there, but I think the newer objectives and which are taking the more importance in the organizations. The organizations are becoming more and more customer centric. Today, we are talking about the organizations running behind the valuation game. The startup gets launched, the higher the customer base, you are able to drive the growth, and you are able to fetch the better valuations. I think those are the kind of things that the organizations are focusing on. So yes, the bottom line is there, but I think the larger market shares you have, that's becoming very, very important. How do we manage the deficits? That's very important, because initial PE fundings, the most organizations are attracting the funding and burning cash to attract more and more customer bases. But how do we manage the deficits so that we are no more just land up some paragraphs in the history and become a larger organization? So the deficits needs to be in control, and in fact, in the long run, the organization needs to remain profitable. How do we manage the corruptions? Typically, the corruptions, we have linked the word more with the government organizations, the public sector, but I think that does not remain there only, because today the kind of the scale and the complexities of the organizations we are talking about, there's a lot of decentralization of the powers that's happening in the private sector also, and hence even they are not prevented from the corruption. So that's a very important area that the organizations are bothered about. The faster growth, because you can't, the management is very impatient because of this digitalization. Also, there's a high amount of volatility. So the time is also very key. The growth has to be there, but within the very less time. That's very important and the focused area. Increasing social responsibilities around the environmental health and safety. Another focus area, very important, with the sustainability reporting and environmental emphasis that the all large governments are focusing on. That's becoming very, very important for the organizations, and the higher volatility in the stakeholder confidence. That's very important. So today, with this social media, and the people are very much connected, whatever happens, it reaches to each and everyone quickly. And what happens because of this, the impact that comes on the organization, that very fast. The stakeholders' confidence gets shaken very easily, and there's a high amount of volatility. Very recent examples you would have seen in the share prices that gets reflected. Suddenly it goes up, so suddenly it goes down with every short or a big news. Paytm was a very classic example. Suddenly you see that the IPO comes in and the share prices goes 1/3 of its launch price. What's it? Suddenly somebody is talking about the sustainability of the organizations, and the people are just ready to sell off their holdings, and the share price is going down. That's a very good reflection of the volatility of the stakeholders' confidence. But what's happening because of this? There's a different level of risks coming out. what the fraudster have the more and more access to the data, like the organizations have, the hackers can get into the systems, and then the fraudster could be external or the internal to the organizations, and they can do much bigger damage. Employees in the social media, they can talk about your organizations. Indigo was very classic example that the employees posted certain videos, and suddenly the kind of impact that comes to the organization, everybody is aware about it. With this remote working, the organizations are allowing employees to use their own devices, which we typically quote as bring your own devices. So different level of the security threats it brings while the employees is using their own devices. Are we compromising on the segregation of duties? Because if not full workforce is working on the ground, how do we align to that? Or if we are compromising on the segregation of duties only because we want to keep the businesses running, are there newer avenues of the risk getting evolved? Maybe we have to get to the basic and do these SOD mappings more effectively. And in the end, because of all this, the kind of pressure that's get building on the organization is that lending towards the higher financial instabilities on the organization. And it's very important that we help the organization raising those alarms and the red flags well in time. Now, what's happening because of this? This entire game is shifting. We need to enhance our knowledge base and modify our ways of doing the audits. Be vigilant of the areas that we focus on while we are auditing it. And what's happening because of this? The organizations are constantly enhancing their expectations from the auditors. I'm not saying that the expectations are changing, because expectations never go down like prices in the market. I will say it's further getting enhanced. Whatever we were doing, that's very much there. Now the audit committees and the boards are more demanding. They're wanting, hey guys, you have to keep giving me the assurance on the processes, but do tell me where I can save cost. Do tell me where I can have the larger surprises. So enhancement of the expectations there, and we have to meet that. Now, what's happening because of all this? Let's see what are the challenges that comes to the auditor while all this change is happening. One, does it create the mismatch in the expectations from the auditor, the kind of output that we feel that we have to give, and the kind of output that the management expect that the internal auditor has to give? Because when I say that the expectations are enhancing, I think that's the factor that we have to keep in mind and try aligning the expectations from the management. Secondly, are we addressing the uncertainties either internal or the external? In this digital world, these uncertainties gets coupled with the volatility, because it comes very fast to the organizations. And it thinks we don't have time that we keep doing the risk management, studying the risk for 5 months, 6 months. By that time, if something happens, it will have a very huge and very quick impacts on the organizations. So can we become more agile to faster turn around our outputs and raise the red flags and the alarms to the management? And the third, which is the most important, what I feel is the audit risk. Now, audit risk, as you all know, that refers to the risk that an auditor may issue an unqualified report due to its failure to detect the material misstatement. So in a nutshell, that I am not able to do my job properly, to do my audit checks properly, because of which, if the auditor is not able to identify any fraud or a material error or a misstatement, and hence give an unqualified report, that's a very large responsibility and a risk that auditor carries on their shoulder, because there's a high probability that it can happen, because the business processes have become more complex. There's a high amount of the business transactions that are happening. We are talking about the manless business transactions. We are talking about the world of big data analytics or big data that's been there. So do you think that if we keep focusing on our traditional approach of interview, observations, vouching, and that to a certain sample, would we be effective, and can that give me a comfort that I can have a comfortable sleep after I issue my reports? That's a question that we need to answer and need to see how do we address that risk by changing the approach that I can follow. Now let's look into the main subject that I was talking about, that how the technology has evolved over a few decades. Now, if you see this on the top of it, I have given you on the time scale, the different technologies that got introduced and how the businesses have adopted it. I'm sure you would have all seen or heard about the days of calculators. When the calculators were there, the people started thinking of, hey, it's a very good tool, and we are able to do the calculations much faster. We are able to do the accounting much faster, followed by the spreadsheets. And because of this, the data analytics was used by the businesses, maybe in a simpler form. But since the MS Excel, the Lotus Notes got introduced, some bit of the data analytics was there. And more specifically for the purpose of doing business, for the purpose of analyzing the trends. And these data analytics were largely for the business presentations, the financial growth journey and all, much less for studying the customer behavior. But that's where the recent changes in the technology are helping the organizations too. What happened after that? The system applications, the standalone applications were built. The business started using that. These are networking concepts got introduced. Remote connectivity came into the big. Internet got introduced, and the ERP systems got introduced. I think I'm talking about just a decade or a couple of decades back. But what's happening because of this certain earlier technologies are diminishing, and there's certain technologies, these technologies are maturing. So most of the business, even the startup business or any smaller businesses are connected to the internet or using any simpler ERP systems. What's happening because of this advanced and level of analytics that the businesses have started using into, and then we are moving towards the emerging technologies, the cloud computing, robotic process automation. Now everybody is talking about the machine learning, big data analytics, blockchain of the world, artificial intelligence, natural language processing, and the general purpose machine language. I'm sure all these words are no more a jargon to anyone. And these are the technologies that the businesses have adopted to understand all their stakeholders, the vendors pattern, their customer behavior, and be able to serve what their customer needs, and which is in turn reflecting a very high amount of growth in a very less time. And accordingly, we see the way we communicate, because the communication is a very important tool for doing any task. Of the way we communicate is also changing. Gone are the days of the letters, the hard copy documents, or the simple audio-based communications, or the desktop-based communications. Then the emails got introduced, the laptops and the smartphones, the people started using it for the businesses. Audio-visual communication in some or the other form. The hard copy documentation got replaced by the soft copy documentations, and then getting started shared on the saved in the form of a DMS or shared through the internet. I think even these technologies are slowly getting matured. But today, the emails are like just on your phone call on the smartwatches. The iPads and the high-speed laptops are available everywhere. More smarter tools, the people are using the OCRs and the natural language processing. You have the high-end software, you just scan it and the information is converted into the textual form, over which you could perform the advanced analytics. And the very high speed of the internet we're talking about. We are just moving away from the 4G and entering into the 5G even in India. Just think of the kind of further disruption it can bring in the environment around us. Now why we are talking about all this? This is just the the evolution of the different technologies that we've seen. But correspondingly, if you see that if you have to be relevant, what is the change in the corresponding audit techniques that we need to build in? That's very important, and that's very relevant for this session also. Now, in the below, you would have seen I have summarized some of the audit techniques, like the inspection, physical verification, inquiries, the observations. We all auditors are tuned of it. We all are taught even right from the days of articles. Those are very relevant, but little lesser being used these days. Remote working is taking the lead, and there are smarter ways of doing these audits. Analytical procedures are becoming more prominent. The system walkthroughs, reviewing the systems is very important. And more importantly, what is coming now is the intelligent audit using the advanced level of analytics, artificial intelligence, and using the robotics. How we can do that? Let's deep dive into some of the slides. And you will get a flavor for that. I'll not spend much time on some of the theoretical slides, but giving you a gist of it. Accordingly, if you see why my audit techniques needs to be modified and changed, you will see our overall internal audit approach is getting modified. You would have heard about the traditional approach, which is like doing all the areas in the year based on predefined focus, frequency, and focusing on certain high impact areas. Then the risk-based audit took prominence, and we focus on 80-20 principle, identify what is more important for the organization, and try channelizing on all energy on the key risk for the organization. But what is needed for the time being is to adopt a smarter internal audit approach. And what do I mean by that is that we blend the benefit of both traditional as well as the risk-based approach, couple it with the digitalizations, and become more and more effective. Means that I need to identify the risk also, what is more important. However, be mindful of the speed with which that risk can impact the organization, because they are digitalized. The businesses are using artificial intelligence and the robotics. So how do we can factor those kind of risk in my audit planning, in my audit approach? And secondly, how do I adopt this technology to do much more comprehensive audit so that my overall output is more relied upon and it's more comfortable for me also. It reduces my audit risk because the quantum of the transactions are much large. If I manually keep on doing the audit, I cannot increase my sample from maybe 25 to 50, 50 to 100 or 50 because it's very cumbersome. So right from the planning, I need to see what all I can do using the data analytics or using the robotics. And then only something where the analytics cannot be used, can I just get into, and on certain exception basis only, I can adopt the manual audit approach. How do we do that? We'll see in some of the subsequent slides also. Now getting deeper into having understood the change in the approach, and the first being the data analytics. Now let's look at what do we mean by actually the data analytics, and is it too technical for we as an auditor to adopt it? I don't think it's there. There are a lot of applications, a lot of softwares which are very user friendly and can easily be learned by anyone. Now, but let's see what the data analytics is all about. We would have seen certain definitions. It's a process of inspecting, cleansing, transforming, and modeling data with the goal of discovering the useful information. That's very important. The end goal is that we have to discover some useful information out of it, and it has to be conclusive and helps in the decision making. What does the Gartner say? So they leverage data in a particular function or a process to enable context-specific insight that is actionable. So the key is it gives you insight and which is actionable. So eventually, it helps you in the decision making. And the other definition also extract useful information to support a decision making. So it's all about how do we churn out the information more effectively so that it gives me certain meaningful information and helps me in decision making. And there's also confusion. Is the data analytics same as the data visualization? Because the moment somebody just represents a graph or a line chart or some regression, is it analytics? Is it visualization? Or is there any difference? I will say analytics is churning the data and coming out with the meaningful information. But if the end output itself is a huge data, it's very time consuming to even study that output. And hence, if we can present that output in a much more easier way, pictorial way, which is all about the data visualizations. If I have the same data in the table, if I can just convert into a graph in certain trends or in certain videos, I think the effectiveness with which information can be studied will be very different. Now let's see on the maturity curve of data analytics, where we as an auditor stands. The starting stage is what happened, which is the descriptive analytics. I'm sure we all are doing it. If we do certain bit of an Excel, we all are very good at postmortem of the information. That's what the auditor is all about. So I'm sure we are very comfortable. We can get into what happened. What is more important is that are we doing the diagnostic analysis, that why it happened? Once we analyze what happened, if there's a misstatement, there's a fraud, or there's a big error, are we getting into some kind of an analysis? Okay, is it happening from particular user ID repeatedly? Why is it happening? Is there a computer or the system bug, or is somebody trying to manipulate? Are we churning the data to answer why? I will say 50-50, somewhere we are doing, somewhere perhaps not. What will keep us more relevant is what will happen? Can we get into predictive? Somebody will question ki predictive is not for the audit, because we have to give more of an assurance or more of a comfort around what happened in the past. But hey guys, is it something that's going to keep us relevant, or is it something the management is expecting to us? Where do I draw a line? Or can I do something that I can help them predict something? And more importantly, can I use the analytics for the prescriptive analysis? Can I be more preventive? And how an auditor could be preventive? I'm not stepping into the shoes of the management, but still, if I am able to deliver my results or reduce the frequency of my audit deliverable, believe me, I will move from report-based descriptive to prescriptive and the preventive control. And I'll give you a glimpse of that, how it can happen. This is just a data architecture of how the analysis happens. Below the data layer, the humongous data is there, which gets translated through some tools and the applications. We translate it, bring it in a form which is more meaningful, and then comes the top layer, which is analysis. That's where the and audit logic, I will say, or a business logic, whatever we want to put into to be able to churn out a meaningful information. So the complete analytics is bifurcated into these three layers. And let's see a glimpse of the different analytical tools over a period, how it has evolved. I think that will be very helpful. If you see earlier, there were Excel or the SAS were being used, and slowly the Oracle got implemented. Then the Tableau, you would have heard of Power BI and the many other softwares that got introduced recently. Why is it important for us? Because all these applications comes out a very different level of maturity. And if we measure that maturity on 4 different parameters: data integrity, the amount of capability of self-service, the analytical capability, how high data and how quick it can churn, and then the overall data governance. And I think in all these 4 parameters, over a period, all these applications have improvised. And today, all major applications provides very high amount of data integrity and a self-service capability, very good amount of data governance. Now with that, I will get into robotics, because data analytics, I'm sure most of us would have used. See, when I say about robotics, let's understand what the bot is about. Are we talking about some human look-alike machine that will replace me as an auditor and tomorrow go to the process owner and starts doing the questionnaire or the survey or the walkthroughs? No, we are not talking about that. Here we are just referring to some computer application, some software who, based on some rule-based activity, can do a lot of tasks that we as an auditor do. Let's see some of the capabilities of it. Can it read documents? Yes. Whatever form the document can it be. If we just convert it into a digital form, even if it's an image, the bot can read it. It can extract data from any of the ERP systems. It can manage documentation. It can store the documentation. It can create the trails, like we create the audit trail. It can analyze the information. It can match and reconcile 2 different sets of information. It can use the if then else rules, because some bit of decision making is there. It can apply that applications. It can interact with any sort of API. By API, it can help you. So take an example. This it was referring to the social media audit. How do we do about it? Today, you can't think of a human being sitting on a machine. You go and start searching the Facebook and see, okay, who is talking negative about my client? Okay, you start going to Google and start searching about it. It's very, very humongous activity. But yes, a machine can do it for you. If you program it with some keywords, a machine can go to the public forums. They can fetch the information. It can run 24/7 and fetch out certain meaningful information for you. So it can scrap the data from the public domain and the websites. Can it do the report drafting for you? Yes, it can. It can replace you for drafting the reports, and it can help you circulate the reports to all the audience and fetch the information. So bot is like, if as we operate on the computer, if you program it well, it can just run and replace all our rule-based activity. I have certain POCs for the bot also, but let me see if the time permit. we can see, but there's some meaningful slides. I'll quickly show it to you, and these links can otherwise be shared. Now, this is very important that we have talked about the analytics, we have talked about the boards, but how do we merge all these tools and techniques in my complete audit cycle? Now, if we see the complete internal life cycle, it's divided into 6 phases. We go and obtain the knowledge of the business and its environment. We do the audit planning, we gather the information, we analyze that information, we perform our fieldwork and the execution, and in the end, whatever we have noted, we report it to the management. Now, these are the 6 typical phases. But can we leverage systems, machines, and tools to do some bit of a task in all these phases? Yes, to a high extent. First, being the knowledge of the business. Yes, for the remote working, using the webinars like we are doing this session upon some audio video conferencing tools, we can definitely do a lot of it sitting remotely using emails and all these capabilities. We can do a lot of audit planning. A lot of analytics can be used to fetch out the meaningful information from the organization's ERPs, and it can help you focus on what's more important. It can help you in the risk-based audit planning. It can help you identify what is more material for us. So a lot of it can be analyzed. So a lot of tools can be used there also. It has the I mentioned about the self-service capability. So if you have the right set of connectors, it can automatically go to the SAPs and fetch the information from the any of the backend software or any of the data warehouse the organizations can have. It can fetch the information for you. It can analyze the information for you. Yes, some bit of field work and the execution, some bit of test it can perform, and then some bit of report writing. And if it's a repeated issues, it can do it for you, and it can circulate also. Now, what is more important? I was talking about moving from descriptive approach and how can we become more prescriptive and more proactively. And I think that's where, if we use technology, at least some rule-based activity where the bots can run 24/7 and issue the flash reports, don't you think that the auditor could be very fast in churning out the results, and hence it could be perceived more as a preventive? I'll give you a very classic example. If technically we get into how a movie is formed, if you run a movie slowly, you will see it is nothing but a collection of lot of still photographs. Now, if all the still photographs runs at a certain speed, it appears as if there's a motion. Now, similarly, the situation, if we are able to churn out our results very quickly, before even a fraudster or a material misstatements gets hidden somewhere and it runs away, we can very well help the management in prescriptive as well as becoming more preventive in detecting any material misstatement or a fraud, and help preventing them well in time. This is just a high level presentation of, if you look at the complete business value chain, how much of it can we do using technology and the analytics. I'll say broadly around 80 to 90% of it can be done. Yes, it comes with a caveat that there has to be a high amount of maturity with the organizations also. There's a lot of digitalization and the information has to be available in soft form. But if it's there, believe me, more than 90-95% of the work can be done either remotely using analytics or the bot kind of an application. Yes, there are certain areas like security, inventories, where the physical presence will be relevant, something like the culture audit. I think that's where our experience as a human being, as an experienced internal auditor matters. And if we can channelize our energy to audit those areas effectively, I think will be very relevant. That's on the audit side of it. This is a glimpse of the internal control framework. Now, can the technology help us doing this control testing and the analysis? Because this every organization has to do repeatedly. Can we do it? So we did certain study around it very objectively, mapping each and every risk and controls activities for a certain set of organizations, and see where the bot can fetch out the information, perform the analysis, perform the testing, and give the results. Somewhere it could do the complete testing end to end. Somewhere it could just fetch the information, but the bot can't test it because it's highly unstructured or some human intervention is required. But if we summarize the complete sequence of events, we could see as high as broadly 65 to 70% of the control testing or the entire work could be automated, and look at the effectiveness of the internal audit, where it could be that we channelize all our energy for the balance 30% of the work, and focus on what cannot be automated, and wherein more futuristic risk could be there. Now, how do we actually go about it? I think it's very important that we start embed this right from the planning stage. Now, this is a very illustrative extract of an audit program that I fetched into. Take an example of order to cash or the inventory management, that we identify the key risks, and then against those risks we match what are the audit checks I have to perform. Now, right at that stage, if we have studied the organization well, we can identify what kind of audit checks can be performed using analytics or bot, and then where we need to do the manual checks. And you would see the blue ones are one where the complete analytics can be performed. Green are the one if the data is mature enough for the organization, and if it's available in the automated form, even that can be automated. And red are the ones where the physical presence will be required. Take an example, if I have to review the complete price master, analyze the price master and start finding the unauthorized changes, yes, we can analyze it. A lot of analytics we can perform around it. But if we have to see whether somebody had approved that kind of a price change, if that approval is also automated, we can perform analytics around that, or we can put a bot around that. If not, somebody will have to manually go and look at that document where the manual sign off or the manual override would have been signed off to look at that kind of an authorization. So that's how, right from the planning stage, we have to identify where analytics could be leveraged or a bot could be leveraged, and identify the checks where I have to do the manual audit. Second more important aspect is, at least using this analytics and the bots, we can churn a large amount of information, take out certain initial level of exceptions, do the smarter sampling rather than a random sampling, where there's a more probability and the high chance of things going wrong, and then all channelize my energy just to focus on those initial exceptions and recalibrate and validate that with the hard copy documentation, so that we know that yes, whether that exception is there or this is just a false positive. So similarly, if we have to do the invoice re-invoicing for the dealer, we can see, okay, if there's a trend of invoicing cancellation, we can identify those trends, and likewise many other examples are there. Now that's on planning, that's on execution. Then what about reporting? We heard the bot can do reporting also. We saw that the analytics can help us in the complete value chain. How does reporting how in reporting we can use these tools? That's very important. Now in this slide, I have mentioned certain attributes of the typical issue. We have the title, then we go and mention the detailed observation, what have been noted, and then we do the risk rating of it. When we do the root cause identification of it, we look at the impact analysis, how it can impact the organization, and then do the recommendation and the management comments and the action plan. Now, see, a lot of it, we can use the data analytics, and if we enrich those sections with the data analytics, this reporting will be much more meaningful. And again, if we can have a flavor of the data visualization, then the reporting will be even more effective. Now, even for detailed observation, we can use the analytics. We can look at trend, we can look at percentage exceptions, and we can report the presentation or the observation even in the form of a chart or a graph. Even in the risk rating, if we have to do a critical, major, moderate, at times it is very subjective. You would have seen the audited comebacks. Okay, you have rated it critical based on sample, but then they start questioning your sample itself, whether the sample is representative of the population or is it biased. So there's always a challenge in doing the risk rating. But if I have done a good data analytics around it, and if there's a larger sample or if it's the complete population, then I'm sure we can very easily rate it critical, major, moderate. We can do a very good root cause identification with the examples I just shared in the part. And very importantly, impact, because that's where the attention of the management goes into. If we can do a complete impact analysis, because again, this is also very much caution. If I just take a sample of 50, and if I say that in 10 cases, I noted something, what would be the impact? Can I just extrapolate it and extrapolate the impact? Again, it's very disputed area, very subjective area. But if I can do the impact analysis using the analytics and running those scripts on the complete population, believe me, a very different picture we can represent to the management, and the effectiveness of the audit reports can be enhanced multifold. Now, before I end and open the forum for the question, let's take a glimpse of it. I promised you to show how we can be more preventive in the fraud identification. This is an illustrative hypothetical scenario that I've created. Look at just 8 years from now, by 2030, where do technology can take us, and what would be the typical life of a chief audit executive in 2030? Think of a scenario: 7 a.m. the audit executive wakes up in the morning, and he wakes up rather than an alarm through a mobile alert, and he has a complete dashboard of the controls health in the organization in his mobile, and he can see, okay, how much percentage is the green, red, amber, and by the time he wakes up, he's on his way to his office between 8 a.m. and to 10 a.m. I'm sure the world is not going to change, and the traffic's gonna ruin our life even in 2030 also. So it's gonna take a substantial time in the transit. So okay, so what happens? He gets an alert. Now that alert says that somebody has possibly tried to override a payment control, and there's some possible split of the payment approval hierarchy, and it could be possibly a fraudulent payment. The moment he gets an alert, but not sure, it could be a false positive. What it happens? He triggers a detailed investigation through his mobile phone. There is a team sitting in the office. The audit manager gets the trigger. He quickly gets into the system, looks at the backup documentation, study the complete case, and is able to conclude whether it's a false positive or it's a red flag. Now, if he identifies it's a red flag, he need not discuss with anyone. He has seen the documentation. In this system, he triggers, and what happens? He triggers the stop payment, because the trigger goes to the finance team. Finance team eventually triggers the stop payment to the bank. The payment gets stopped. Secondly, it triggers, he's able to identify from which user ID it has happened. It suddenly blocks up the physical access of that particular user. Possibly that particular user was trying to go out of the office, but the security holds him back because the rights got deactivated. By 1 p.m. they starts getting into the root cause, identify the root cause, or if the control definition needs to be further enhanced, that got improvised. They further do the analytic script changes also, and embeds the modified script into the systems. So by 3 p.m. they have the new control dashboard with the dynamic control environment enhanced on a daily basis. And by the 5 p.m. the audit executive can go back home and comfortably, because he has not only identified the risk, even prevented it to happen, and further strengthened the control environment right then and there. So no need to wait for the quarter or 6 months for the audit report to go out. I think his job is done. So thank you so much. That's pretty much from my side on the evolution of tools and techniques. Thank you so much, Surbhi. I stop here and happy to take if there are any questions. Thank you so much, everyone.
Thank you so much, sir, for making all of us aware with such key practices and techniques, and for such engaging session. Thank you so much. So with all our speakers, we are taking some of the questions. Okay. So one is what could be the possibility of privacy coming in the way of social audit? And can you please narrate any of your experience and how it was handled? So,
Sid, you are on mute, maybe.
Ravi, can you please repeat the question again? Yeah. Sorry.
yeah, sure, sir. What could be the possibility of privacy coming in the way of social audit? And please, can you narrate any of your experience and how it was handled?
Privacy will not come in way of social audit. Rather, any sort of a data or personal sensitive information which is made in a public domain can be tracked and the address can be given for same. So if you look at the example which I gave on Facebook, yeah, it was to do with the personal and personal sensitive information. And I think that's the nearest example I can give. But on the contrary, it will not come in way. Rather, through social media audit, it will get tracked. That information can get tracked, and any sort of a non-compliance with maybe the IT Act in India or GDPR rules will get highlighted. So the exception which comes out will trigger that there is a non-compliance to the regulation, which is either the IT Act or the GDPR.
Okay, okay, sir. Thank you. So one more question, it is for internal controls. Is there any specific reason for defining key control against only against material error in financial statements, and can it be used for safeguarding organization resources also?
Yes, I think that's a very good question, first of all. Definitely it can. But I think the material misstatement factor still will have the upper notch in defining a key control. However, one thing we need to remember is this definition of key and non-key control is not that static also. So if there is a business need or if the business changes, then non-key control could also be a key control and vice versa. I hope that helps.
Okay, okay, ma'am. Thank you. So, okay. One more question is this regarding security control. Due to COVID, we have to move from physical to remote working, and one of the major issues like how to exercise controls there, like securing that connection and securing the connection between the employees and the company, and of course clients and the company, how to secure it and what kind of controls we should exercise there.
I think one is to use the trusted VPN service. That would be one. Second is multi-factor authentication. I think that is something which is very basic, but again, very important. So if the authentication is at two ends, then there's a lesser chance that a person could pose as an imposter and make any damage to the system. Another one would be enforcing password changes. As I said, repeatedly enforcing password changes, having frequent trainings, especially on the phishing email side of things. If anything else, Mohit sir, Siddeshwar sir, please feel free to add.
No, Pisha, I think that's very well answered. But I think just to add on to that, this question is very fantastic. And I think I gave a reference about in this COVID world, BYOD, bring your own device, when the organizations are doing that. See, there could be high chances of the data confidentiality leakages. So take an example, if you are having this, you are able to open that particular information on your laptop. Now, I may, with some computer configuration, can stop taking the screen share, can stop sharing him over the email. What stops me to take a picture from my mobile phone, right? And just a very classic example, but there could be the various ways. So it's a constant tug of war. We need to keep evolving. And for this case, take an example is that we enforce employees to keep the videos open, and there's a constant reporting and the monitoring around it. Today, there are tools and applications who can analyze. Now, when we talk about the big data analytics, the system can analyze large amount of images, even in the videos. That's the level of high technology that is there. But I will say eventually there has to be a balance between the operations and the controls. If the information needs to be shared on a need to know basis, there's a complete information mapping needs to be done. And if that information cannot be damaging, we can allow the people to run the business more effectively, or think of the alternate ways and mechanism, or try bringing the people just in the security. To take an example, the BPOs, they would always have a very secured access. The people goes in there, perform their duties. Even the mobile phones are kept outside. So these are the kind of controls which are developed to mitigate certain level of risk. So the complete study needs to be done, looking at the sensitivity of the information, the implication it can have and having a balance between the operations and the controls, and then decide a set of a controls that needs to be built in. But yes, the question is very relevant, and that's the challenge ahead the organization that needs to be overcome.
Okay. Thank you. One more question is it is also very relevant and useful. Is it the scope of internal auditor to certify internal financial controls and provide comfort to the statutory auditor?
See, what the law says over here is that it is the responsibility of the board of directors. Now, the board of directors can, and obviously they do it to the audit committee. The audit committee extended arm is the internal auditor, and they can do it, but they can't certify on behalf of the management. They can't do that thing. The statutory auditors have to do it on their own. Even if the internal auditors are doing it and giving it, so obviously they can't certify it. There's nothing like a certificate which the internal auditor can give. But the statutory auditors may rely on that work, but have to do their own testing as per section 143 of the Companies Act.
So I'll just add on to that. I think that's a very good perspective. And I appreciate the question where it's coming from, because today, if we look at the domestic environment, because people do compare IFC with SOX, but we have not adopted the SOX and spirit. And when it comes to the matter of the year-end audit report signing and all, people do say, okay, whether the internal auditor has seen that, all these questions comes in. So that's very important. If we look at the new 3 lines of model from the IIA, it talks about, yes, we as an auditor are the 3rd line of defense, but we need to have a very collaborative and the consultative approach with the 2nd line. Now, it will be good to leverage internal auditor to enhance the governance, but not to reduce it. Because certain organizations, when the management builds the control testing framework, if they have doubts around that the people do certify the effectiveness even without implementing the control, just to safeguard themselves, then yes, the governance is weak. You need a 3rd eye to look into, and internal auditor can definitely go and help them. But it has to be seen only as an extended arm, as a support. Eventually, the responsibility from the law side, as Sid also mentioned, is on the management. You can't think of certifying it, but yes, you can just play a role in enhancing the overall governance as an independent person going and looking at the testing. But yes, the question of certification doesn't arise.
Okay. Thank you, sir. One more question is there. How to differentiate key controls and non-key controls?
I think I did touch upon this. So the best way, I think the simplest definition, as I said, is a must-have and a good-to-have. So whether that control, if it is implemented, if that control is not implemented, will it affect the financials? I think that is the simplest way to look at it, as opposed to a non-key control, which is a good-to-have, but we still have other controls in place. It's a fail-safe control, as I say. So the best way to do that, I think, one, it comes with practice. It's not very easy. Sometimes there's a very thin line between the key control and the non-key control. So first of all, it comes with practice. Second is, as I said, the most important thing is to assess the impact. If it's not there, I think that will give you the answers through which it could be determined. Thank you.
Okay, ma'am. Thank you so much. So now we are moving forward. Now we are having with us CA Gyan Chandra Mishra, sir, who is Central Council member, ICI, and Vice Chairman, Internal Audit Standards Board, ICI, CMA, CP, and member in approx 23 committees. Gyan, sir, am I audible to you?
Yes, you are very much audible, madam. Actually, I am traveling, so there is some network issue, hence I am not getting my video on. So please continue.
No issues, sir. Just I request Gyan, sir, for concluding remarks and vote of thanks.
So thank
Over
you,
to you,
thank
sir.
you.
We can hear you perfectly.
Thank you, Survi. At the outset, I am very much thankful to all the learned speakers, Madam Piyusha Limaye, CA Siddheswar Balla ji, and of course CA Mohit Gupta ji, and very much thankful to CA Chiranji Soumel ji, the chairman of Thiruvananthapuram branch of SIRC of ICI, for giving your precious time in this program. Friends, as all the delegates and all the speakers might be aware that IASB is organizing this program on every Saturday basis, and the name of the series as of now is Global Trends in Internal Audit, a look ahead. I hope that the deliberation of the learned speakers on the various important topics like internal control, paradigm shift, social media audit and culture audit, evolution of tools and technique of internal audit, all these must benefit in your day-to-day practice. And of course, the way the chartered accountancy profession is contributing in the nation building, at the same time, it is the responsibility of we people to protect ourselves also with regard to the technology part, very importantly. So I once again, I'm thankful to each and everyone. Surabhi madam, to you also, because your role is very important in organizing such wonderful webinars in the interest of the members at large. So once again, thankful to each and everyone, including the respected participants who have spared their valued time, because without participants, it's not possible to have any program. I can see that in last 8 months that very huge number of participants are joining this program, this series. So I'm sure that you people will keep on contributing for the profession and of course in the knowledge dissemination of ICI at large. Thank you very much, one and all. Thank you.
Thank you.